Today, the Federal Open Market Committee decided to leave our policy interest rate unchanged. We do not need to be in a hurry to adjust our policy stance.
This is a Fed that's not in a hurry to take any further action. This is the articulation of the pause, and he outlined those reasons.
I think the decision was well understood and I think justifiable.
Leaving all options open for the next couple of meetings seems like the prudent way to go at this stage of the game.
It wouldn't surprise me if the Fed is tempted to stay on hold until the summer.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowicz, and Annmarie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, Bloomberg Surveillance starts right now as we come into Thursday with equity futures bouncing back, up by a third of 1% on the S&P 500. Two earnings stories to watch here. Encouraging numbers from Meta, a very powerful story coming out of Tesla, supporting this equity market overnight.
The story, I think that is the right place to start. What we learned overnight is that with tech earnings, and frankly all earnings, words matter more than the actual numbers posted from the previous quarter, because whether they beat or whether they missed, it was much more about the spin forward, about the vision of the future that led to the potential gains.
And people bought it, particularly for Tesla. As for the day ahead, it looks like this. You'll get an ECB decision a little bit later than Apple after the close.
Yeah, and can they spin forward the same kind of idea at a time? But there's a lot of skepticism. They are the least loved Magnificent Seven name aside from Tesla at a time when a lot of people are looking for the upgrade cycle that never came. Can they convince people that they really do have some plan for artificial intelligence?
You've seen 5 downgrades on Apple.
Yes.
5 over the last few months.
Yeah, that's unheard of. Just to give you a sense, nobody puts a downgrade on any of the big tech names. And yet they have the greatest number, other than Tesla, of downgrades and potentially less positive views. Can they turn that around potentially with some of the same type of optimism that we heard from Mega Meta?
Nasdaq futures right now up by 0.5%. We begin this morning, though, with our top story, a regional American Airlines jet colliding with a military helicopter while approaching Reagan National Airport from Wichita, Kansas last night. The plane carrying 64 people, the helicopter carrying 3.
We want to extend our thoughts and prayers to those individuals who were impacted by the events tonight. I spoke with President Trump and his team in the Situation Room. I had a conversation with Secretary Pete Hegseth as well, and then with the Kansas delegation and the mayor and others in leadership, as well as Governor Youngkin from Virginia and Governor Kelly from Kansas. From the Department of Transportation and FAA's perspective, we are going to offer full support to those on the ground, to the mayor, but also to the NTSB, who is going to be conducting an investigation in this matter.
The crash prompting a search and rescue operation for any survivors in the Potomac River, with an investigation into the cause underway.
We are actively working with local, state, and federal authorities on emergency response efforts, and the American Airlines care team has been activated to assist our passengers and their families. We're cooperating fully with the National Transportation Safety Board in its investigation, and will continue to provide all the information we can.
Joining us now is Bloomberg's Annmarie Hordern from Reagan National Airport. Annmarie, good morning to you. Bring us the latest, please.
Well, Jonathan, we still have the search and rescue mission underway. More than 300 individuals a part of this. We should note that this river was icy. The weather conditions were rough. It's a muddy river. And so far, what we've heard from CBS News reporting is that about 18 bodies have been recovered. So far, we have not heard of any survivors. You were listening to some of those officials briefing last night. As soon as this plane went down, this midair crash at 9 p.m., we've heard from a number of officials throughout the evening. We are waiting on another update here at DCA. The mayor of DCA says they will be back. Likely we'll hear from also Sean Duffy, the newly sworn in transportation secretary, yet again at 7:30 a.m. So just in about 90 minutes time, we should have more of an update. Obviously, the nation is waking up to an incredibly tragic and devastating morning here from the nation's capital.
Yeah, the first potential fatal crash that we've seen in this type of plane going back to 2009. Annmarie, talk about trial under fire. What are some of the big questions in this press conference that you expect to be asked?
There's a ton of questions as people are waking up, and obviously as soon as this happened last night, even the President of the United States was asking questions on his Truth Social. How did this happen? How could this Black Hawk helicopter traveling 3 U.S. military personnel, we do know that this was a training, how did this helicopter not be able to see this flight? Does this have to do with communications? Does this have to do with potentially they were on different radio frequencies? Does this have to do with the fact that potentially air traffic control wasn't aware? Or is this airport just over capacity, which has been a hot button issue for DCA and this airport for years? And as you know, this was a huge issue last year when they added 5 more round trip flights when they had the FAA reauthorization bill sent to Biden's desk. So there's a ton of questions about how exactly this could happen. And we'll have to wait to see if we get any of those answers just in about an hour and a half's time.
Annmarie, as you know, a process needs to take place now, but it involves 2 secretaries, 2 very new secretaries. Defense Secretary Pete Hegseth only confirmed late Friday. As for Sean Duffy, the Transportation Secretary, only confirmed on Tuesday. The challenge for the Transportation Secretary, a whole lot bigger on this front. We've had a number of close calls across US airports, particularly over the last couple of years. Can you walk us through what we have done to address the shortage we have of air traffic controllers?
A number of close calls, and that is why you have seen also the FAA take a ton of heat. And we should note right now, Whitaker has stepped down, the head of the FAA, Mike Whitaker, in December. We're still waiting on a new FAA head. So it's a great point to bring up that this is going to be a huge investigation, a huge undertaking for a brand new team, and some members of that team are not even in place yet. What we have seen happen is last year when you had this FAA reauthorization, it's a $100 billion measure sent to Biden's desk. He was signed. There was bipartisan support for this. What they did do is they added more FAA traffic control jobs. And they put in a provision that actually they would need to work for the next 5 years to get it to the highest level of staffing. But again, this money and this bill only happened in the spring of last year. So we're still waiting on a lot of that to filter through. And in DC, I will just say again that this has been a huge issue in terms of to get that bill across the finish line, more money for air traffic control. They added 5 more flights here. This airport is many local congressional representatives, senators would say that they didn't want to see that happen because they just feel that this airport is too oversubscribed. You do not just have commercial airplanes landing here all the time. We are just south of the Pentagon and we are across the river from the nation's capital. There is a huge presence of military personnel that also operates along this river, and that is why this is going to be a serious investigation, not just for the Transportation Authority and the new Secretary Sean Duffy, but also, of course, the DOD.
Annmarie, appreciate your time. More from MH throughout the morning down in Washington, D.C. Expecting a news conference to take place at 7:30 local time, so about 1 hour and 20 minutes from now. I want to share a quote with you from back in 2023 from the chair of the National Transportation Safety Board. Our safety system is showing clear signs of strain that we cannot ignore. We've had a number of close calls in this country. We don't know what's happened here. As we've said repeatedly, a process needs to take place. But we've had a number of close calls and they're aware of where the strain is, and we've got to do something about it.
So what's the plan? And talk about a new administration just newly minted, as you outlined. How are they going to bolster some of the air traffic controllers who clearly are operating on a sub-staffed type of operation? Honestly, we went so long where air travel was thought of as the safest way to travel in the United States. How do we get back to that? It still is very safe on a relative basis, but stories like this really dent that perception.
Just to reiterate that, at 7:30 Eastern Time, a news conference taking place, 7:30 local time in Washington. We'll bring that to you in about 1 hour and 20 minutes. Coming up on this programme, we'll be keeping an eye on the market as well. We'll be catching up with Cameron Dawson of NewEdge Wealth as the Fed holds rates steady. George Gianarikas of Canaccord Genuity on Tesla's growth and the pledge to return to growth in 2025. And David Tsui of S&P Global Ratings looking ahead to earnings from Apple. In the markets this morning, equities are pretty steady. Bonds are too, as Fed Chair Jay Powell signals the central bank will hold rates steady for the foreseeable future. Cameron Dawson of NewEdge Wealth writing, further interest rate cuts will likely need to come with incremental weakness in the economy, transforming further cuts from because they can to because they should. Cameron joins us now for more. Cameron, good morning. It's
Good
good
morning.
to see you. What was your big takeaway from Chairman Powell in that news conference yesterday?
That the recalibration phase is clearly over. He called it that recalibration phase, not this one, which just means that the interest rate cuts that we had, which were tweaking policy rates lower in order to get to closer to this idea of neutral, is likely behind us, meaning that you'll have to see an uptick in the unemployment rate. You'll have to see an uptick in or a weakening in the overall growth rate in order to suggest that they could cut rates further.
Is this actually a really good signal that essentially the economy is robust and they're basically just taking a back seat and being as boring as they possibly could, exactly as desired?
We think that the Fed this year is going to be less consequential than they have been, meaning that they're going to be more reacting to growth. They're going to be more reacting to policy versus driving markets as they have over the last couple of years as they started the hiking cycle, then started the cutting cycle. We think overall that the Fed hasn't been nearly as tight as they think that they are. We think that the evidence of growth remaining so resilient, being above trend the entire time that the Fed has been in a tight situation, meaning with the real Fed funds rate being above zero, just suggests that we are likely closer to neutral at this point than having those further cuts, which just suggests that this economy is more resilient to interest rates than it was in prior cycles.
If the Fed's taking a backseat, let's take another tack, because frankly, I think a lot of people would rather talk about earnings than the Fed at this time, given the fact that the Fed is following rather than leading. What was your takeaway yesterday to not just the earnings of Microsoft and Tesla and Meta, but the reaction to them and what actually gave investors confidence?
I think investors are still willing to dream the dream and have this blank check mentality when it comes to AI and CapEx spending. But the thing that jumped out to us most in Microsoft's earnings was this use of the word commoditized, that some of this AI will become commoditized. It will become something that everybody has. And the question that we have is that what will the return on invested capital be for a commoditized product? Very, very different than the monopolized businesses that you think of Microsoft within word processing, or you think of Google within search, or Meta within social networking. These are monopolized businesses or near monopolies that deliver huge returns on invested capital. They have 80% gross margins, 50% operating margins nearly for Meta, which just suggests that maybe AI ROICs could be lower.
It's been a long week for this market. It's only Thursday still. Can we go back to Monday just briefly? On Monday, Lisa, me, pretty much everyone on this show was talking about whether the CapEx narrative would be challenged. Meta came out and basically doubled down on the whole thing. Now, I didn't expect the C-suite to change. The question we asked is whether investors would lose patience. There's no sign of that this morning. The stock is up. Will investors keep patient with these companies as they spend tons of money on these projects?
I think as long as they can keep Googling Jevons paradox, maybe they'll keep being patient. I think what's given people the ability to give Meta the benefit of the doubt on this CapEx is because their top line is growing so much. And the key story for Meta is that they're using AI in order to be able to drive top line faster. Look at the growth in advertising pricing. It was up 14%. That's more than double what the street expected. And that likely is a function of the fact that they're using AI to monopolize more of our eyeballs, to demand more of our attention. Now, if top line begins to slow, and Meta is 98% advertising, which means it's a cyclical business. If top line begins to slow, I likely think that you will see less benefit of the doubt on this CapEx because it won't be able to be absorbed as much given the strong profit growth.
It's not getting much of a cyclical test right now if you're looking at the numbers out of that company.
On any level, whether it has to do with the cyclical aspects of the AI cycle or the economic cycle. But that's a fascinating point. They can apply some of the AI applications and efficiencies, whereas Microsoft could be more of a victim to the loss of margin share as a result.
They're in a strong position. They're having a decent week. The stock was okay on Monday relative to the rest of the market. You know what was down yesterday still? Nvidia again. More bad news from Nvidia. Right before the Federal Reserve decision, some news came out that they may put extra restrictions on the exports of that company to China. That stock did not recover.
Well, because essentially, if you start cutting off their sales to China in some more significant capacity, how much are they going to be facing some of what other companies have been facing with respect to just some of their biggest customers not being able
to make purchases.
Stock is down again this morning by 1%. Cameron Dawson of NewEdge Wealth will be sticking with us. Let's get you an update on stories elsewhere with your Bloomberg Brief. Here's Danny Berger. Hey, Danny.
Hey, John. The latest in the crash in D.C. Search efforts are continuing in the Potomac River after an American Airlines flight carrying 60 passengers and 4 crew collided with a U.S. Army helicopter on approach to Reagan National Airport. The plane took off from Kansas last night and had several members of the U.S. figure skating team on board. CBS is reporting at least 19 bodies have been recovered. Now let's get you a check on Meta shares. They are up 2.6% in the pre-market. Fourth quarter earnings and beat on the top and bottom line. CEO Mark Zuckerberg said that this is going to be a, quote, really big year in AI, forecasting that their AI assistant will reach more than 1 billion people. On the other side of things, Tesla fourth quarter earnings and revenue fell short of Wall Street estimates, but shares are still rising nearly 3% in the pre-market, with CEO Elon Musk predicting an epic period of growth for the company. He said Tesla will begin robo-taxi operations this year. And that's your brief, John.
Hey, Danny, thank you. Tesla up by 2.9% in the pre-market. Up next on the program, the looming tariff deadline.
I prefer across the board. We are treated horribly by the global trading environment. We need to be treated with respect, and we can use tariffs to create reciprocity.
That conversation is just around a corner. Live from New York City this morning. Good morning. If you are just joining us, welcome to the program. Of course, building on the news overnight that a regional jet flown by American Airlines collided in a deadly mid-air crash with a military helicopter on the approach into Reagan National down in Washington, D.C. We'll have updates for you throughout this morning from Annmarie on the ground in the nation's capital, and there will be a news conference, we're told, at 7:30 a.m. local time, so about 1 hour and 12 minutes from now. Plenty of updates throughout this morning, and we'll bring that news conference to you a little bit later on. For those of you following the markets, they look like this. Equity futures up by 0.4%. In the bond market, yields are lower by 2 basis points. The 10-year 450.42. Under surveillance going into the weekend, the looming tariff deadline.
I prefer across the board. We are treated horribly by the global trading environment. They all have higher tariffs, non-tariff trade barriers, and subsidies. They treat us poorly. We need to be treated better. We need to be treated with respect, and we can use tariffs to create reciprocity. A particular product's price may go up, but all of them, this is not inflationary.
So here's the latest this morning. Global markets bracing for President Trump's threat of tariffs against Canada, Mexico and China potentially this Saturday. Cameron Dawson of NewEdge Wealth is still with us around the table. So, Cameron, we've got a threat of 25% on Mexico and Canada, 10% potentially on China. Europe's going to get it too. There could be a universal tariff. Do you have a working assumption going into the weekend?
Well, we think this notion that tariffs aren't inflationary or disruptive because of what happened in 2018 is limited in the sense that 2018 tariffs were so targeted and they were on certain items, certain things within supply chains that eventually didn't get all the way through to consumers, which just means that if you're talking about blanket tariffs across the board, we think that this could actually be highly disruptive to supply chains, potentially inflationary because of that disruption as people are trying to move things around, which just suggests that this could weigh on growth and inflation in a more meaningful way.
That sounds like stagflation. Is that what you'd be expecting?
It's definitely a risk. And when you also throw on top of that the potential for the labor force growth to slow down because of immigration, both of these things suggest that a potential upward pressure on inflation, potential downward pressure on growth. The question is, how far do they actually push these through? Tariffs for negotiating purposes are very, very different than tariffs that are pay-fors. Tariffs that are pay-fors because you want to use tariff revenue to offset tax cuts, for example, would have to be far more sweeping, would have to be far more static, meaning once you put them in place, even if people say, hey, well, we're going to be nicer to you going forward, it just means that there is that risk that we have that upward pressure on inflation, downward pressure on growth.
I'm glad you mentioned that. What the purpose of some of these tariffs are, how realistic it is that they're going to be deployed. You saw the testimony from Howard Lutnick. He also talked about the 25% tariffs that are set to go on Canada and Mexico on Saturday, saying This is a separate tariff to create action. He was talking about the border. He was talking about fentanyl. He's saying if they comply, there will be no tariff. How do you as an investor take different signals from different places and understand how to price in and whether to price in some of these potential levies?
I think the way to approach it as an investor is how you think businesses are going to be able to operate in this environment. If a business doesn't know what tariffs are going to be and if they're going to last for 2 weeks because then you see a response from Mexico and Canada, it really is hard to be able to plan in that environment. And the question would be, are businesses trying to get ahead of this? Are consumers trying to get ahead of this? And this means that you could see disruption to supply chains even if the tariffs don't stick around.
Which is the point that John was making yesterday. I'm totally going to steal from him when he was basically asking, have we reached a point where the auto manufacturers, other than Tesla, are basically uninvestable because of the pipeline from Mexico and how many imports they really have been controlling from that region?
Well, auto manufacturers have not necessarily been the most investable companies even without tariffs because they're so very capital intensive and low margin. But it does add that layer of uncertainty. And it is interesting that Tesla calls out tariffs being an uncertainty for them in their earnings report. But I guess at the end of the day, Tesla isn't a car company. It's a state of mind.
I'm seller. I agree with that.
100%.
I'm a seller of any guidance that is dependent on tariffs. I'm a seller of the guidance from the Federal Reserve. This market was a seller of the guidance from GM. The Bank of Canada didn't even provide any. Anyone providing guidance, whether they're dependent on what happens over the weekend or what happens going forward from tariffs, I think you have to take with a very, very big grain of salt.
Which is what we're seeing in the market. So at a certain point, just to Cameron's issue here, if you see even the threat of tariffs on a prolonged level, could you see those disruptions to supply chains, disruptions to profitability for specific companies, just simply by virtue of the specter of that happening?
So this is a difficult moment in many ways because parts of this market, the multiple, the valuations might be capped. If you are exposed to the tariff story, some of the automobile makers, the auto manufacturers, the likes of GM, we saw that earlier in the week, and then certain parts of the equity market exposed to the AI story. I think there's a sense that the perceived value has shifted away from maybe the energy plays of the last year or so. Do you think valuations are capped there too?
Physical over digital, or digital over physical, really. And I think that that's what the market is coming around to, is that you have had this big surge in optimism that the digital world would drive a lot of physical investment. But even Microsoft said yesterday that they would be moderating CapEx starting in 2026. So if you're starting to see that slow down, it means that your power providers and your infrastructure providers are also going to see growth slow down. So it continues to be this world where we think that there's very little margin for error in the multiple. You're at 22.3 times forward. That leaves no room for negative news. Doesn't mean you can't go higher. We could go into bubble territory, but you would have to see a spark of speculative fervor to get there.
Do you think we did go into bubble territory with certain parts of this market?
I think that we were getting close, and we still have that potential. If the Fed comes out and cuts interest rates a bunch of times and financial conditions ease even further and liquidity becomes even more abundant, and you see this continued surge in YOLO things like meme stocks and zero date to expiration options, I think that we are on the verge of that being a potential outcome for 2025, simply because any higher in the multiple, any higher than 23 times, that has only been achieved in true bubbles.
Just before you go, we'll do this a couple of times going into the weekend. Do you think those tariffs go on? Or do you think we avoid them this weekend? I'm not going to hold you to this. I just want to gauge how people think and how they feel
we'll just run it
about a weekend.
After we get to the decision.
I think that they might go on for a period of time and then get walked back.
Interesting. A period of time being?
A week.
OK. Cameron Dawson of NewEdge Wealth, appreciate it. Sorry to put you on the spot. I just want to understand where this market's at, how complacent we are around this tariff story, if indeed we are complacent about it.
Well, the head of Mexico came out and said she really doesn't believe that this is actually going to go into effect. But there is a plan in place for the reciprocity should they go into effect. And frankly, Howard Lutnick himself basically dismissing these. So at a certain point, how do you price in something that the own administration is basically saying, look, we're just trying to get a certain kind of outcome and hopefully we'll get it?
I don't think we are right now. Futures are up by 0.4% on the S&P. Coming up in just a moment, we'll catch up with George Gianarikas of Canaccord Genuity on earnings from Tesla, which apparently is a state of mind from New York City this morning. Good morning. You're watching Bloomberg TV. Here's a snapshot of financial markets for you stateside. Equity futures on the S&P up by 0.4%, on the Nasdaq up by 0.6%. Outperformance on the Russell, saved by the news conference. In yesterday's session in the bond market, yields were higher, and then they paired those moves higher. Moving lower, we're down by 2 or 3 basis points, sitting right on top of 450 on a 10-year yield. Felt like there was a hawkish tilt, a hawkish bias in a statement. Indeed, for many people, there was. And then in the news conference, Chairman Powell had a little bit of a clean-up, didn't he?
Well, it was just a language cleanup. That was basically the hawkish tilt that people were talking about, and that's how he explained it. And people said, oh, okay. And they walked back the hawkish tone that initially it had. This was about removing the idea of a labor market potentially facing some weakening, the idea of a labor market that's solid, and also took out the idea that inflation was truly on a steady progress to 2%. Not a hawkish tilt, just simply language cleanup.
Dario Perkins of TS Lombard over in London, also happens to be an AC Milan fan, said this morning, and I like this framing. Preemptive easing, cutting to prevent bad things. That was the old playbook, lasted a few months. It's now reactive easing, cutting when bad things happen, and going on to say the Fed isn't a reason to be bullish anymore. I think that framing is pretty intuitive, makes a lot of sense.
And it's similar to what Cameron Dawson was talking about, that we are in a new phase where you have to see something negative for them to actually cut rates. And that's the reason why people are seeing the Fed as potentially not as consequential for now. There isn't a lot of agreement about the direction of the economy. If we start to get truly deteriorating economic data, does that change if the Fed continues to hold rates steady?
Let's turn to foreign exchange. Euro dollar right now, 103.96, negative by 0.2%. You've heard from the Fed. You hear from the other side of the trade a little bit later on this morning. You'll hear from the ECB in a few hours from now.
You said something earlier that I thought was really poignant about how other places are talking about how you can't have forward guidance or a lot depends on tariffs from the United States. How much do the threat of tariffs actually give the ECB a pass to cut rates, even though they haven't reached that 2% target? Can they just simply say, we're facing downward growth shocks due to things out of our control, so don't mind the inflation target that is our primary mandate?
Because it could possibly be a disinflationary shock for the continent, not just the tariffs on Europe, but potentially the tariffs on China, which means the overcapacity in China gets delivered where the Europeans have got to eat it. So that problem for them is multidimensional, and it heads in one direction.
And we heard a hint of that from the Bank of Canada. Does the ECB walk into this open door to allow them to cut rates at a time where growth is flagging? And a lot of people say if they did have a dual mandate, they would definitely be cutting rates today.
The euro right now very close to 104. That decision is just around the corner. Under surveillance this morning, if you are just joining us, our top story. A regional American Airlines jet colliding with a military helicopter as it flew into Reagan National last night. The military launching an investigation into the cause of the crash with a search and rescue operation underway for any survivors in the Potomac River. NBC now reporting at least 30 bodies have been recovered.
What a tragedy. That's all I can say. I mean, we are going to be looking into what is going on with air traffic control, how they can potentially support it. But in the meantime, there were a lot of figure skaters and coaches and their families on board heading to a competition or heading home from a competition in Wichita. Our feelings go out to their families.
Oh, Lisa, it's absolutely devastating. We're still in the process of search and rescue, of course, and then we need to figure out very quickly what happened here. And the two individuals that will help lead that effort have only been in their jobs for a few days. We said this a little bit earlier, that Defence Secretary Pete Hegseth only confirmed late on Friday, and the new Transportation Secretary Sean Duffy only confirmed on Tuesday. So the first full day for Transportation Secretary Sean Duffy, and he's got to confront this.
This is going to be the first and a pretty big test of some newly confirmed members of the Trump administration. How do they deal with a comprehensive look at the current FAA, what needs to get changed, and how do they address an ongoing crisis that is deeply emotional for a lot of people?
Aviation, as you know, Lisa, and we mentioned this earlier, traditionally is very, very safe. But more recently, I think a lot of people will be struck by the tragedies that have taken place internationally. 2 in just the last couple of months, and then here domestically. Even before this, a number of very, very close calls that the former Transportation Secretary, Pete Buttigieg, talked about repeatedly. It's well documented. We are 3,000 air traffic controllers short in this country, and we're going to have to address those issues, and pretty fast.
So how does this administration do that at a time where they do want to increase efficiency of a government? How do they do that in short order when these people have to be experienced and vetted in a comprehensive way? And then how do you deal with this post-pandemic when a lot of experienced people left the workforce? And we've seen that not just with air traffic control, but also the airplane manufacturers themselves.
I mentioned a quote from the chair of the National Transportation Safety Board from back in 2023. If you missed that, I can share it with you now, when she said our safety system is showing clear signs of strain that we cannot ignore, and went through a long list of issues as to what was happening with aviation at the moment. That air traffic and staffing shortages had gone up since the pandemic. You've been on top of this story repeatedly over the past few years. A lack of meaningful training, too many irregular work schedules were cited as well, which is clearly not going to build any confidence into people as they look at the shortage that we have with air traffic controllers.
So again, and it goes to, again, this idea of a massive test in just a day or two into an administration, or some of the nominated and confirmed members of the administration. How do they lay out a plan for exactly how they are going to make it better at a time where there's increasing erosion of confidence from the public in the air traffic control system?
In just under an hour from now, we are scheduled to have a news conference on the ground at 7:30 local time, so about 55 minutes from now. We'll get the latest from Annmarie in the next 30 minutes or so, who's in Washington, D.C. this morning, and then we'll bring that news conference to you when it begins in the next hour or so. That's the latest on our top story. For financial markets, particularly here stateside, a big focus on big tech earnings, kicking off with Tesla, Meta and Microsoft. Reporting some mixed results. Tesla and Meta both offering an upbeat outlook for the year ahead. Microsoft predicting slow growth in its cloud computing business as it struggles to build enough data centers to handle AI demand. And I think it's worth pointing out that that sounds like a capacity issue and not a demand issue.
Well, that's exactly what my thought was. This should be the right kind of miss, where basically demand is so great, outstripping their potential services. And that is the real hamper to their ability to outperform or even meet expectations. They said that demand remains strong, commercial bookings rising 67%, far ahead of what Microsoft had been expecting. So this goes to this question of a state of mind. And a lot of these tech earnings are going to be, what state of mind can you spin this story forward to deal with the adoption and the software and the practice of AI in normal life, rather than just simply building out the chips in the data centers?
Not all companies have the luxury of selling a story that this market will buy. And Elon Musk and Tesla seem to have the luxury of doing that, where they come out with a powerful story and investors buy it. The likes of GM tried to do the same thing earlier this week, came out with a decent outlook. The market did not buy it. What's the difference between those two companies?
Elon Musk has been selling a story for a long time, and he talked about full service driving. He talked about the idea of unrolling some sort of pilot program in Austin in about 5 months' time. He said this is not sort of fiction. This isn't far out and fantastical. He also said that it's going to be amazing. He also has the ear of the president. This is someone who has hinged his entire company on the idea of the future and technological prowess. So it is a completely different type of conditioning for his investors.
One other tech name to watch, NVIDIA is down by 0.5% in the pre-market. It was down in yesterday's session as well. The Trump administration exploring tighter curbs on NVIDIA's chip sales. That sparked the sell-off, Lisa, in yesterday's session.
Yeah, well, at a certain time that people are wondering, okay, you have incredible demand for these chips. That was dented by DeepSeek. Then you throw on top of it the allegations that Cantor Fitzgerald's Howard Lutnick, who is in his confirmation hearings for Commerce Secretary, basically said they stole the technology. NVIDIA chips allowed them to do some of the DeepSeek technology that now has people on the back foot in the United States. There need to be tighter restrictions. And then we heard the administration come out with something similar. So if you start to restrict the potential sales, you could get a same kind of situation as we've seen with the Netherlands counterpart, where you saw the incredible dive of those shares because their biggest customer, China, could no longer purchase chips in the same way.
The administration have called this a wake-up call, but at the same time, simultaneously, I don't think they quite buy that this was the clean success story that was being sold on Monday.
I don't think Microsoft does either. There have been investigations that Bloomberg has reported into just how much DeepSeek replicated a lot of what OpenAI and ChatGPT had accomplished. That will be ongoing.
Let's turn to that state of mind. Tesla, earnings falling short of expectations, but the CEO, Elon Musk, reassuring investors with plans to launch its robotaxi business in June. Musk predicting an epic period of growth ahead. George Gianarikas of Canaccord writing, "We weren't so excited by the results. Management, while calling for growth, did not reiterate the 20 to 30% delivery growth guidance upward by Musk on the last earnings call. He reiterates a buy rating on the stock with a 404 price target." So, George, maybe you're not buying the guidance, but why is the market?
Great question. I think you guys kind of nailed it, right? Look, we agree with Mr. Musk and we appreciate his bullishness on autonomy and robotics. It should be very exciting to get those robotaxis in Austin in June and potentially some new vehicles, right? That's a great story and really exciting stuff. But objectively speaking, the results were less than nourishing. The deliveries reported a few weeks ago missed 2024 guidance. It didn't reiterate the 20 to 30% delivery growth for this year. Margins were weak. We think we heard a delay to full self-driving rollouts in Europe and China. So, we have to be objective. As much as we love the long-term story here, 2025 doesn't sound great, and 2024 didn't end well.
George, one portfolio manager put it like this: the market is behaving as if Tesla's results don't matter, and that may catch investors flat-footed in the case of a large shock. George, what would a large shock be, given some of the earnings that haven't been great, that still haven't dented some of the enthusiasm?
I mean, that's a great question. I think that, some sort of issue with 2025 deliveries, first and foremost, if the removal of EV incentives in the United States has a larger than expected impact, number one. Number two, they're not able to roll out additional vehicles this year. I think that's quite unlikely, but we'll see. And number three, the margins continue to be weak. They have to put in financing incentives based on the fact that interest rates went up. That impacts their near-term ASPs. That impacts their margins. So we have to see a little bit of light at the end of the tunnel from a profitability perspective to I guess give people confidence that the next few years we can see an increase in those margins.
George, what did you make of the fact that Elon Musk, who had been on X talking about different political discussions he's having with Donald Trump, and then took a break and didn't talk about politics at all on this press conference? And if anything, his CFO talked about tariffs as being a potential headwind to profitability for the company. They didn't mention the EV tax credits that are being taken off the table. What do you make of the fact that it's going to be increasingly awkward for Elon Musk and for Tesla to dovetail their future success with policies that might run counter to that?
Look, I appreciate the fact that politics weren't discussed on last night's call. And the point that he made that we completely agree with is that regardless of EV tax incentives this year, next year, last year, ultimately, the car market, mobility, will be electrified. EVs, in our opinion, and I think objectively, are just better than ICE vehicles. And right now what we're seeing is a cost issue. We have to bring the costs down relative to ICE vehicles. That's happening in China, by the way, and that's why you're seeing penetration go greater than 50%. And we have to get more models in the United States. Right now, in the $30,000, $40,000, $50,000 price range, there aren't a lot of vehicles, in our opinion, that are incredibly compelling. There's Tesla, the Model Y and the Model 3. We think Rivian's R2 in 2026 will change that narrative. It's an incredibly compelling vehicle. It's priced right. And as soon as people have more choices, we think growth can reaccelerate in the EV market in the U.S.
George, can we achieve that without state subsidies?
Yes. Yes. I mean, right now, we're trying to bring the costs down in the United States of those EVs. And that's going to happen as we have more vehicles proliferate in the $40,000 to $50,000 range. What's happened in China is proof of that. They have vehicles that are in that range, priced right, and a lot of choice because they've got a lot of EV companies that are incredibly innovative. And that market is taking off, has taken off.
George, appreciate your time and your input. Thank you, sir. George Gianarikas there of Canaccord, Genuity, earlier on Cameron Dawson of NewEdge Wealth calling Tesla a state of mind.
Well, I think a lot of people would agree just simply because if you take a look at the valuations, and I'll give you some numbers, between $500 billion and $600 billion of Tesla's current market cap is based on its EV and energy business. This is according to Evercore ISI. Meanwhile, over at DataTrek, Nick Colas says that 90% of Tesla's share price is tied to what the company might do in the future and not necessarily what it does today.
Well, certainly based on the last 24 hours, it's hard to disagree with that. The stock is higher by 2.5%. With an update on stories elsewhere with your Bloomberg Brief, here's Danny Berger. Hey, Danny.
Hey, John. We begin with an update of the tragedy in D.C. Defense Secretary Pete Hegseth has announced that the military has launched an investigation into the cause of a deadly mid-air collision between a passenger jet and a Black Hawk military helicopter near Ronald Reagan Washington National Airport. The investigation will focus on determining the cause of the tragedy. NBC News now reporting at least 30 bodies have been recovered. Elsewhere, UPS shares are falling 11% in the pre-market trade. It tempered expectations for a long-awaited rebound this year. The company's core delivery operations are suffering from a long-lasting slump in demand. Average daily package volumes remain below pandemic-era peaks. NVIDIA shares, those are also off this morning, more than 0.5%. The Trump administration reportedly exploring more curbs on NVIDIA chip sales to China. Sources tell us that officials are focused on expanding restrictions for chips used for AI development. NVIDIA argued restrictions push China to become independent of U.S. tech, which will hurt U.S. companies. And that's your brief. John.
Hey, Danny, thank you. More from Danny in 30 minutes' time. Up next on the program, big tech earnings underway.
Ultimately, anything that drives the cost of Gen AI, inferencing, fine-tuning, reasoning down is good for software because it means that you get greater volumes, you lower barriers to entry, and you create this flywheel effect.
The latest on Microsoft and Meta in just a moment, and for UPS, getting hammered in the pre-market. We're down almost 12%. We'll bring you the why in just a moment. Two names to watch going into the opening bell. Here's one, UPS, it's down by more than 10%. Here's another, Caterpillar, it's down by more than 4%. Not a great outlook from Caterpillar. Could get a whole lot worse, particularly if we get tariffs from the incoming, or rather new, administration. As for UPS, Lisa, share us the why for that move of 10.7% lower.
They had a forecast that came in. They expect sales of about $89 billion, which is below the $94.9 billion that Wall Street was expecting. But this is the why. It's because they are reducing volume with Amazon by 50%. This comes after long-running tensions with UPS building out its own logistics empire, and basically both of them mutually agreeing to separate, with UPS looking for higher margins. What's fascinating to me is that in the past, UPS was a bellwether for global growth, for the U.S. consumer. Can it still be considered that, given that this has to do with a shift in market share away from UPS and toward Amazon?
Our stock is down in the pre-market by more than 11%. Under surveillance this morning, big tech earnings underway.
Overall, the cost curve coming down is a good thing for Microsoft, right? There's the element of the OpenAI relationship and training, but ultimately, anything that drives the cost of Gen AI, inferencing, fine-tuning, reasoning down is good for software because it means that you get greater volumes, you lower barriers to entry, and you create this flywheel effect whereby the more people use these Gen AI offerings, the more the innovation, the more those net new use cases come about.
So here's the latest this morning. Microsoft, Meta, Tesla kicking off big tech earnings with AI very much in focus. Apple reporting after the close later on today. Investors expecting a record performance despite headwinds from China and the company's slow AI rollout. Bloomberg's Mandeep Singh joins us now for more. Mandeep, before we look forward, let's look back just briefly. Big takeaway for Meta and Microsoft yesterday.
Well, I think AI is still the story, and with Meta AI saying they will have 1 billion users, even though the monetization is mostly in their ad pricing. That just sounds music to, everyone that's bullish on social media ad spend. And look, they control the market, they have the moat. So from that perspective, everything looked great. They also called out Reality Labs, the $20 billion losses, and how this will be the make or break year. Now, we know they continue to lose $20 billion every year, but if they're going to decide whether they will continue or not, I think that's a positive sentiment in terms of, okay, this won't be a recurring loss going forward.
Mandeep, you scrutinize these companies. You watch their earnings calls. You listen to them. Has it always been like this, where essentially the numbers matter less than the vibes that some of the executives put out there?
I mean, look, I think with a long-term story like AI, which everyone believes this is transformational, yes, I think your plan of action and the vision really matters. And in this case, the hyperscalers are the ones who have invested the most, who have shown it changed the business. I mean, look at Meta. Like they're growing top line 20% plus. So this is a very impressive growth number. I mean, yes, they guided soft, but look, there's no doubt that this company is delivering in terms of top line growth.
Meta and Microsoft. Meta doing okay in the pre-market. Microsoft just a little bit softer over the last 24 hours. Apple's up next. David Tsui of S&P Global Ratings joins us now for more. David, welcome to the programme. Let's talk about Apple. Apple goes through these periods where some analysts start giving up on the name. We've had at least 5 downgrades over the last couple of months alone. And the concern is pretty obvious that there isn't enough here to trigger a big super cycle of upgrades. Now, David, do you take a different view on things? Are you encouraged by what's on offer?
I am. I think I look at Apple a little differently. They're very stable, unlike many of the big tech companies that are investing in data centers, and their growth is double digits, whereas Apple, their revenue has been very steady. If I look at the current quarter, you're right, the iPhone 16, the new refresh hasn't been stellar, but it is to come as more Apple Intelligence features get rolled out across the world. We do expect a big upgrade cycle in 2025.
David, is the bar just really low for Apple at a time where they have probably some of the greatest number of doubters out there on the street?
I don't think the bar is low. I think they do have a lot of partnerships, and they don't have to invest so much, so they're not always on top of mind in terms of the next big AI innovation, but they do have partnerships with OpenAI and with Google's Gemini, so it's not because their products are lacking features.
Tim Cook has traditionally been the big ambassador between the U.S. and China. It comes at a time where there's a complicated relationship between both nations and a new administration. What do you expect them to say, and what do you want them to say with respect to their presence in China, both from a manufacturing perspective as well as a sales one?
It's tough to handicap what they're going to say, but I think more importantly is if you look back since the last Trump administration, what they've done is they've diversified their manufacturing base away from China. It is a long process, so we're seeing progress. They still have a long way to go, but they understand that the manufacturing base being so concentrated in China is not going to be good for business, especially in the current geopolitical environment. So they are making progress, but at the same time, they're exposed. So I don't know what they're going to say, but I think their actions speak to further diversification away from China being the major hub.
David, it's really tricky to understand how to value Apple when the core hardware business is not seeing growth, and yet the multiple is quite elevated. Now, I understand there's been a shift towards services and higher margin businesses, but how do you explain to people how this company should be valued?
How it should be valued is outside of my expertise, but this is how I look at it. It is a very stable company. They have iPhone that are very sticky, and every 3 or 4 years, you're going to see their customers upgrade. Their market share isn't very high from a global perspective, so there are many opportunities for them to grow in emerging markets and continue to pick up share. And the prices or the rollout and also the iPhone features that they have, it's very abundant. There are many price levels, and they can continue to sell more phones at higher prices in emerging markets. And I do expect their revenue growth to continue. And it's not just about iPhones too. Like this year, they're going to have iPhone SE, they're going to have Mac, they're going to have an iPad refresh. So every year with new products in this iOS ecosystem, they're going to continue to grow revenue. And you mentioned services as well. That's a high profit, high margin business.
Those numbers drop a little bit later. David, appreciate your time. David Tsui there of S&P Global Ratings. In the next hour of Bloomberg Surveillance, Mike Wilson of Morgan Stanley will catch up with the Cato Institute, Stefan Slowinski of BNP Paribas, and the former St. Louis Fed president. All of that and more just around the corner from New York. The second hour of Bloomberg Surveillance up next.
I'm not going to have any response or comment whatsoever on what the president said. It's not appropriate for me to do so.
They're going to react to see how fiscal policy ends up playing out. and they're in a wait-and-see mode.
The policy risks that they're facing from tariffs and immigration and fiscal policies are immense here.
What the Fed can't do is they can't front-run policy. Until we know the sequence of policy, the magnitude of policy, the Fed can't front-run that.
How is the Fed going to manage through this environment of heightened policy uncertainty? There's no real good answers for that.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowicz, and Annmarie Hordern.
The second hour of Bloomberg Surveillance starts right now with Apple earnings coming after the closing bell. We get a bit of economic data in about 1 hour and 30 minutes, 90 minutes away. You get jobless claims in America. Before that, an ECB rate decision. So a fairly stacked day ahead for financial markets.
When it comes to both central banks as well as economic data and earnings, my focus is very much on earnings right now because it signals a shift that we have seen increasingly in the AI cycle and, frankly, in the dispersion between the winners and the losers and why the reactions in markets have been the way they have.
It's interesting that we have some faith in some outlooks and no faith in others. GM puts out a decent outlook, gets sold. The Bank of Canada doesn't provide one, it's worried about tariffs. Chairman Powell can't really offer one much right now either. Then Tesla comes out and says it's going to be a pretty epic year ahead, and this market laps it up.
So it's a stock picking market, and this is a storytelling market. And the story that people want to hear is that AI adoption is here, that we're all going to work efficiently and better and have better lives because of how much AI is really adding to what we do every day. And they don't want to hear about huge data centers. They don't want to hear about energy, and they don't want to hear about the nuts and bolts of either Caterpillar or UPS getting packages to places or potentially even building the cars that we're even talking about with some of these businesses.
UPS right now in the pre-market down by 10% following earnings from them. Broadly, equity futures doing okay, positive by 0.2%. We begin this morning with our top story. A regional American Airlines flight colliding with a military helicopter near Reagan National Airport. The plane carrying 64 people, the helicopter carrying 3. The Transportation Secretary, Sean Duffy, only sworn in on Tuesday, offering full cooperation.
We want to extend our thoughts and prayers to those individuals who were impacted by the events tonight. I spoke with President Trump and his team in the Situation Room. I had a conversation with Secretary Pete Hegseth as well, and then with the Kansas delegation and the mayor and others in leadership, as well as Governor Youngkin from Virginia and Governor Kelly from Kansas. From the Department of Transportation and FAA's perspective, we are going to offer full support to those on the ground, to the mayor, but also to the NTSB, who is going to be conducting an investigation in this matter.
The crash prompting a search and rescue operation for any survivors in the Potomac River, with an investigation into the cause still underway. The American Airlines CEO, Robert Isom, weighing in.
We are actively working with local, state, and federal authorities on emergency response efforts, and the American Airlines care team has been activated to assist our passengers and their families. We're cooperating fully with the National Transportation Safety Board in its investigation and will continue to provide all the information we can.
A news conference taking place at 7:30 local time. That is 26 minutes away. Joining us on the ground, Bloomberg's Annmarie from Reagan National Airport. Annmarie, welcome back to the programme. About 60 minutes since we last caught up. What's the update?
Well, Jonathan, NBC Local News is reporting that actually now more than 30 bodies have been recovered. We do still have the search and rescue mission at play here in the Potomac River just behind me following this fatal crash last night around 9 p.m. right here at DCA. So there's still a tremendous amount of uncertainty and a ton of questions that still need to be answered this morning. You know, you listen to airline experts and a lot of questions they're starting to bring to the forefront is what was the communication like between these two aircrafts, and what was the communication like between those aircrafts and the air traffic control. It's a very difficult situation right now, and hopefully in less than 30 minutes time, when the mayor of DC leads this press briefing, we'll get some more answers.
Annmarie, can you just paint the scene in terms of DCA being one of the most congested airports in the country, given that you do have low-flying helicopters and a lot of traffic going right to close to downtown Washington, D.C.? Is there a sense of what kind of staffing there is, what kind of air traffic control, and whether there have been other incidents like this that have raised concern in the past?
Well, this has been a hot topic in D.C. for years. And when they got through that last FAA reauthorization last year, part of that, more money to the FAA, more money to the NTSB to make sure that there's more air traffic controllers, make sure that there's upgrade of the industry, of the aviation industry, modernization of these airports. In lieu of that, actually 5 flight paths were added to this airport. And that had a lot of concern with a lot of the local senators in Maryland and Virginia and representatives, because this is an airport that is over capacity, not just the airport itself, but as you alluded to, Lisa, we are just south of the Pentagon. This is where you see a tremendous amount of military aircrafts fly. You also have dignitaries using this airspace that sometimes go under the radar. And something like last night when we heard from the new Defense Secretary Pete Hegseth that this was a training Black Hawk with those 3 U.S. military personnel on it. So this is an airport, even though it's very tiny, the airspace and the airport is definitely oversubscribed. And we heard from Senator Jerry Moran last night of Kansas, of course, representing the state where this flight originated from in Wichita. And he was talking about how this is so personal to him, not just because, of course, he's representing constituents and he was just absolutely heartbroken and devastated yesterday, but he personally lobbied American Air to bring that flight here to Washington, D.C. That flight was only 1 year happening, and he's been on that flight. So that is the scene of what DCA is like and why it is such a difficult airport to really operate and control, because this airspace is oversubscribed.
Annmarie, just before you go, we're getting pictures of the search and rescue effort. Could you share with us the conditions on the ground, how difficult things actually are?
It's incredibly difficult, especially given the fact that last week we had really unprecedented weather in Washington, D.C. You remember the inauguration was moved inside because of that. So there was ice on the top of this river. It's not a very deep river, but it is very muddy. And that ice is just making this even more difficult for these divers and these search and rescue mission professionals. What we do know is that the helicopter was found upside down. Reports last night that it was just bopping around, so really making it even more difficult for these individuals to really try to understand where these bodies are and what kind of conditions these aircrafts are in. And then the plane itself was split in 2. So this is an incredibly difficult situation for these individuals who have been working since this crash happened at 9 p.m. last night.
Annmarie, stay close. We'll catch up with you later this hour. That news conference taking place at 7:30 local time. That is about 22 minutes away. Lisa, plenty of questions. I'm not sure how many answers they can provide.
Well, let's see at 7:30. I just am really, my heart goes out to all the families, because that is just tragic. A lot of young people on that plane, and we will await to hear some of the answers to those questions.
I think we all share that sentiment. Just to repeat that, 7:30 Eastern time for that news conference to take place about 20 minutes from now. For those of you just joining us, looking at the markets, equity futures doing okay. We begin this hour with stocks relatively higher as we get results from both Meta and a bullish outlook from Tesla supporting equities. Mike Wilson of Morgan Stanley saying in the near term, the best outcome for equities is that rates continue to decline. In the longer term, the best outcome for stocks is a re-acceleration in earnings growth and macro indicators. Mike joins us now for more. Mike, good morning to you, sir.
Good morning.
Let's try and put those 2 points together, shall we? Yields need to come down. The why is important. But in the longer term, we need economic growth to perform as well and for earnings to re-accelerate. Does that come with higher interest rates, with high yields, with high term premium?
Well, this is the game. I mean, 450 is, we're right at it right now as we speak, which is kind of interesting. I mean, that's the kind of line in the sand where, if rates go higher, even if growth is better, that's going to restrain multiples. So what we really need is that sort of that sweet spot between 4.5, where growth is not falling off a cliff. The Fed is doing their thing. It's, I think people are talking about, the Fed's not cutting. Well, they cut 100 basis points and back end rates went up. So I'm not so sure that pausing is really all that bad for stocks in the short term. And now, of course, we're in earnings season, right? So it's all about the idiosyncratic behavior in the short term.
Well, you say earnings, they need to show, they need to deliver. What does that mean at a time where storytelling is so important? And it's not just the actual numbers, it's what you say about them, your tone, how many exclamation points you use.
Well, it's show me time, right? So there has been a lot of storytelling going on. And I think we're seeing a separation of the winners and losers, even last night, right? And that's good. I mean, that creates opportunity for stock picking. And like one theme we've had is sort of the adopters versus the enablers within AI. And very simplistically, don't want to oversimplify it, but that's basically software over semiconductors. And that's been working not just since Monday. That's been working for 3 to 6 months. So as usual, the market's gotten ahead of it. There's going to be themes, I think, new themes that pop up this year, and that's really our job.
Has that pivot happened? Can you say that essentially the tipping point, at least in the market zeitgeist, was on Monday, where really the adopters are now going to absolutely rip while the NVIDIAs and the Microsofts, the enablers, are going to take a leg behind?
Well, like I said, it's already happened. So the question is does it persist? What we're really excited about is not even that trade, but like, when does the technology get diffused into the broader economy? That's the true broadening out story, where you can get small mid-cap companies performing. We're not there yet, okay, because we don't have the solutions, right? That's what the application layer is, where the solutions are going to be built on the compute platforms. So that could take a year or two, you know what I'm saying? Now, markets will get ahead of that, but in our view, that's really a second half story or a 26, 27 story. So that's why our view on the index has been, we're probably going to be choppy here for the next 3 to 6 months. A lot of announcements coming out, Fed's on pause, still about uncertainty around the implication of these policies, both globally and domestically. So we'll take a break here.
This is curious to me. Tesla actually warned about the potential for tariffs and the potential for that to hamper some of their revenues. Didn't seem to dent their stock at all.
Yeah.
GM talked about it. That was it. I mean, they basically delivered. They had the forecast, but their shares tanked. What did you learn from that?
Well, when it confirmed what we already knew, which is the retail community is very active right now, very active. And we see it in our data, and they just love these stocks. Tesla, you can name a bunch of stocks that they just buy every day, not because they're dumb or they don't know what they're doing. It's just they're buying into these themes. And then, of course, that creates demand from institutional investors too. So I don't think it teaches anything new last night. That's a continuation of something that's been going on for 6 months.
But these are themes you would say don't fight because the tailwind's behind them, at least the buying behind them is that powerful.
It's very consistent. I mean, you come in every day and the same names are kind of swooped up, and I don't see that changing unless there's a real kind of event. So if rates were to go to 5%, I think that would change. Okay, if we were to get some sort of an indication that, oh my goodness, unemployment's going up again and the recession risk come back onto the table, or there's an international event, a geopolitical event, something like that. But in the absence of something, a real gross shock, I don't see the demand for those types of stocks waning in the short term.
What if a Chinese AI lab comes out and says we can do something that you've spent billions on for $5 million?
Right. So what happened is some stocks got punished. And then the money moved back into the kind of fan favorites. And look, this is the theme for 2025. I think this is a good thing. We're going to see this capital concentration, right? That money can now go to other places, right? So financials have done extremely well. That's a new area where there seems to be a perpetual bid. Software is a new area. Consumer services have done extremely well. And then even areas like media and entertainment. Those have been our 4 sectors that have shown the relative earnings revision breadth. There's some thematics in there as well. And we think that probably continues.
Just to broaden out, and I understand it's a stock picker's market, but do you think that you've seen enough to say that the equal weight will significantly outperform the market cap weight S&P 500 this year?
Not yet, and I want to caveat this because typically when you go from a period of market cap weighted outperformance, you usually get the relative outperformance in a down tape, right? So if you get the S&P market cap weighted to go down, then you can see that spreading of wealth, if you will, to other areas. And I don't want to compare this to 2000 completely, but that's the most similar period. In 2000, we had a lot of these tech stocks came off, and the S&P equal weight was basically flat. A lot of indices were, a lot of sub-indices were actually up. So that's what we're looking for. I think in the first half of this year is the best chance that I can say that could happen, since 2022. I like to bring this up to people. 2022, right? Everybody, thinks it was a terrible year for the market. A lot of stocks were up in 2022. That was the best breadth that we had. So it's a similar setup where I don't think the market's going down 25%, but the point is, if the index can give it up, then that capital can allocate to other areas.
The Russell right now up by 0.9% on the small caps. Mike, good to see you.
Good to see you.
As always, thank you, buddy. Mike Wilson there of Morgan Stanley with an update on stories elsewhere with your Bloomberg Brief. It's Danny Berger. Hey, Danny.
Hey, John. Washington, D.C.'s Reagan National Airport is closed until at least 11 a.m. this morning after an American Airlines plane collided with a military helicopter last night. There were 60 passengers and 4 crew on board the plane and 3 airmen aboard the helicopter. NBC News reporting at least 30 bodies have been recovered from the icy Potomac River. Elsewhere, Caterpillar shares are trading lower 3 1/3% in the pre-market trade. Fourth quarter earnings beat analyst estimates, but Caterpillar warned that sales and revenue will be slightly lower in 2025. Of course, the picture could change quickly for all global manufacturers given expected tariffs from President Trump. SoftBank is said to be in talks to invest as much as $25 billion in OpenAI. People familiar say that this would be on top of the $15 billion that CEO Masayoshi Son has already committed to the American Stargate AI infrastructure venture. The move would potentially make SoftBank OpenAI's biggest backer. OpenAI, for its part, declined to comment. And that's your brief. John.
Hey, Danny, thank you. More from Danny in about 30 minutes' time. Up next on the program, tariffs incoming.
We are your biggest trading partner. Show us the respect. Shut your border. This is a separate tariff to create action from Mexico and action from Canada. And as far as I know, they are acting swiftly.
The deadline fast approaching this weekend. The coverage up next. Equity futures on the S&P positive here by 0.1%. Bond yields moving lower. We're down 3 basis points. The 10-year 4.4941. And the surveillance this morning, tariffs incoming.
We are your biggest trading partner. Show us the respect. Shut your border. This is a separate tariff to create action from Mexico and action from Canada. And as far as I know, they are acting swiftly. And if they execute it, there will be no tariff. And if they don't, then there will be.
So here's the latest. Commerce Secretary nominee Howard Lutnick defending President Trump's proposed tariffs on Canada, Mexico and China before they're set to go into effect on Saturday. Joining us now to discuss is Scott Lincicome of the Cato Institute. Scott, welcome to the programme, sir. The threat of tariffs, even if they don't implement them, just the threat, what's the price we all have to pay?
Well, the price we pay is with uncertainty. When you have Trump tweeting about tariff threats and then Prime Minister Trudeau responding with his potential retaliation, that affects the real economy. Fed economists back during our last Trump period saw that investment was reduced by tens of billions of dollars because trade policy uncertainty was the highest it's ever been in any administration dating back to the 1960s. So that means a little less output, fewer jobs, less growth overall.
This is a reason why people haven't really been buying into the GM story or some of the auto manufacturers that are heavily dependent on Mexico because they do expect this to persist. Is it going to be incredibly bifurcated this time around, given that there are specific countries that are being targeted and specific products, or is this going to be more wholesale than it was last time around in 2018?
Well, it depends on who you ask. There have been reports that the Trump administration is looking at more targeted tariffs at sectors like autos or security-related sectors or semiconductors. On the other hand, you have Donald Trump saying that he wants a global tariff, and he repeated those claims just a couple days ago, while at the same time he's posting on Truth Social about Colombia or Canada or Mexico or China. So it's really hard, I think, to get a real handle on where the administration intends to go. Right now, it seems they just have a dictionary of options, and they're letting the president trial balloon a lot of it.
In the meantime, Scott, you say the implications so far from policies have to do with potentially a growth shock negatively because of some of the uncertainty. What are your other presiding assumptions based on what we do know? I know there's still a lot of questions to be but what we do know so far about the Trump administration's plans.
Yeah, I mean, beyond the uncertainty, I think we can guarantee some level of new tariffs in the next, say, 6 months or so. It gets a lot murkier again when we talk about what kind. My base case is some sort of increase on tariffs from China due to their failures to implement Trump's phase 1 deal from his previous term. The Canada and Mexico situation, I'd be amazed if we're really putting tariffs on avocados right before the Super Bowl or blowing up the North American American supply chain. Instead, though, I think you could see core components of autos, whether it's batteries or engines or looking at the USMCA rules of origin with respect to how autos are manufactured here and in Canada and Mexico. And then metals, steel and aluminum, I think, are another big area because Trump removed those national security tariffs back in 2019 because the Canadians and Mexicans retaliated. But then imports have surged, and the steel industry is complaining about those, saying it's a backdoor to Chinese steel. So I think we could see something there, too.
So, Scott, before you go, we've got to talk about food. You mentioned avocados. You're fantastic at this. You know I follow your work. How do we make food prices cheaper? What can they actually do? What levers do the government have?
Well, the big one is tariffs. We still impose a lot of tariffs and anti-dumping duties and other restrictions on the importation of safe foods from around the world. And we're trying to add even more, and not just from Donald Trump, but from our trade remedies regime. Lowering those could give us a nice little decline, or at least slow food price inflation. Another area is renewable energy. We spend billions and billions of dollars subsidizing biofuels. That's basically putting food into our gas tanks and other things. And that's been shown, again, to increase food prices. Now that's not going to stop eggs from being really expensive or anything like that, but it could give us a little break at the grocery store. And unfortunately, though, those are very politically popular things I just mentioned. And I think the chances of actually getting that kind of real relief are pretty slim.
Hey, Scott, appreciate your input. As always, Scott Lincicome there of Cato Institute on what we can do to maybe make things a little bit cheaper, but obviously what we won't do anytime soon.
I love the idea, too, that they're not going to necessarily put tariffs on Mexican avocados right before the Super Bowl, and it just sort of speaks to some of the controls out there. I do think it's notable what he's saying about slower growth as a result of some of the uncertainty and how that's being factored into certain sectors, given that this is going to be an ongoing threat.
There's a price for the uncertainty. There might be a benefit too. We talked about the front-loading of orders, the bringing forward of orders that we could see over the next few months of people worried about tariffs on particular goods.
There's some really big questions, and it doesn't just have to do with tariffs. We haven't spent as much time talking about immigration, but this is actually what economists are really looking at as well, which is there has been this sort of immigration shock, labor shock to the supply side that has offset some of the potential inflationary aspects of the recovery. Does that shift? So far, not clear. A lot of signaling, but not necessarily you're seeing the same kind of carry through.
Yeah, please you brought that up, because I think a lot of people, a lot of economists believe that this Federal Reserve was bailed out by a big supply side shock, which was very loose immigration from the previous administration, which enabled the labour market to rebalance and ultimately allowed this economy to grow without having the inflationary impulse that we otherwise would have had. And that the disinflation we saw as a consequence of that was less about the interest rate hikes from the Federal Reserve.
Much more about the fact that you had a supply of workers that were accepting relatively low wages relative to what people had in the market. If that stops, does that become an inflationary headwind? These are some of the things people are talking about. It goes to the idea that, yes, there's uncertainty with respect to Trump policy, but there's uncertainty as to where we are and how we got here to begin with, and whether we'll start to see some of the drift off of some of those trends.
If you are just joining us, of course, welcome to the programme. I'm sure many of you are aware our top story across this nation this morning, a regional jet flown from American Airlines colliding in a deadly mid-air crash with a military helicopter late last night on the approach into Reagan National Airport in Washington, D.C. In about 4 minutes' time, a news conference that will be heard across this nation from Washington, D.C. with the Mayor of Washington. That is just around the corner. We'll bring it to you live in Washington in just a moment. Moments from now, a news conference in the nation's capital in Washington, D.C., led by Mayor Bowser in Washington, off the back of the deadly crash taking place overnight. When that begins, we'll bring it to you. With equity futures right now on the S&P 500 stateside, your market looks like this. Just about positive on the S&P by 1/10%. With some morning movers, here's Manus Cranny. Morning, Manus.
Jonathan, good morning. It is all about the coagulation around big tech. And I kick it off with Meta, up 1 1/8. you've just been promised a really big year. A record fourth quarter, but no full-year guidance. Revenue growth this quarter is going to be the lowest in 2 years, and the promise is that they will deliver a return on equity on $60 to $65 billion worth of capex. I get the sense this is a market that's really trying to justify this kind of capex relative to those kind of numbers. The question you need to ask, and I think it's a lovely line from one of the analysts this morning, AI spending, does it look bloated or is it visionary? Roll it over, have a look at UPS. We know there's a bifurcated economy out there, but what is the slowdown in core parcel business at UPS telling you about the US economy? Nobody's calling for a dramatic slowdown, but this is a global canary in terms of stagnant demand and parcel shipments. This company's already in remedial action, Jonathan. They've already closed 45 centres. It's a question of how do you shift the narrative within a business which is perhaps bloated. And that takes us to pharmacy benefit manager Cigna. Stock down nearly 10%. They've tried to set a floor in terms of what they will earn this year, $29.50. But they offer a product, think of it this way, it's a stop loss. You're a big employer, you've got costs of healthcare, and then if it triggers over a certain ceiling, they step in and they cover the cost. That is bruising to them at the moment. This is where they've got to do remedial action. And also the actual loss, the loss ratio that we look at within Cigna, it's called the medical loss ratio. And that is rising above estimates, almost 88%. Quite a dramatic turnaround because, again, this is about control over costs and product. It's global. Jonathan.
Manus Cranny, thank you, sir. Appreciate it. Some of the movers to look out for this morning. Our top story across this nation, though, a regional American Airlines flight colliding with a military helicopter overnight near Reagan National Airport. The plane carrying 64 people, the helicopter carrying 3. NBC News reporting earlier this morning that 30 bodies have been recovered. Any moment from now, we'll have a news conference in Washington, D.C., led by Mayor Bowser. When it begins, we'll head over to it. Joining us now here in New York, one of our aviation experts, Bloomberg's Sid Phillip, joins us for more. Sid, good morning to you, sir.
Morning, John.
Your early take on what's happened overnight?
At the moment, it's still early to say what really went on and what, because the American Airlines plane was in the process of landing. It was on their short final approach to DCA. And essentially, it's still early days to see what happened. I mean, we're going to have to see what the NTSB comes out with in terms of why the helicopter was in where it was, because the aircraft was in position to land, and that was basically where it was.
There are a lot of questions about air traffic control and just what has gone on since the pandemic in terms of a lack of staffing or training and some of the close calls that we keep hearing about. Where are we in our understanding of how understaffed and what some of the issues are within the Federal Administration of Aviation?
Yeah, so this is the first major deadly aviation incident in the U.S. Since 2009, and so this is, I mean, there's been a series of near misses, and the government the previous administration talked about the need to hire more air traffic controllers, and that's really where the previous administration was talking about how they need to modernize ATC and how staffing at the FAA was below where they wanted it to be. And so I think for the new incoming administration, they're going to have to examine where those plans to hire, because it takes a long time to hire air traffic controllers, train them up, and make sure that they're ready for the job, and that's where they're going to have to sort of work on it.
That's where I was going to go. If this is a known problem, what has been the obstacle in remedying it? So I think we've been talking about this for years, right, John?
And hopefully we get some answers in just a moment. That news conference begins right now.
Good morning. I'm Muriel Bowser. I'm the mayor of Washington, D.C. We are here at Reagan National Airport to provide an update on the tragic events of last night. I'm joined by U.S. Transportation Secretary Sean Duffy, D.C. Fire and EMS Chief John Donnelly, American Airlines CEO Robert Eisen, the Washington Metropolitan Washington Airports Authority CEO Jack Carter, United States Senator Mark Warner, United States Senator Tim Kaine, U.S. Representative Don Beyer, as well as the Chief of the Metropolitan Police Department, Pamela Smith. And we are joined by first responders from across the metropolitan Washington region. I speak for all of us when I say, and certainly all Washingtonians, how very sad we are for American Airlines, for the United States Department of Defense, and for all Americans for the loss of life that happened with the collision of these aircrafts. We know that includes families from across our region as well as in Kansas and across the country. This morning we all share in a profound sense of grief. I do want to thank the first responders who acted quickly last night, who ran towards danger, went into a very frigid river, and have worked throughout the night. Chief Donnelly reported in last night's briefing that we have a strong mutual aid agreement in our region, and those teams have worked together throughout the night in really tough and heartbreaking conditions, and we should all thank them for their heroic efforts. So we'll have several updates today. I'm first going to turn to the Secretary of Transportation, Sean Duffy, and then you will hear directly from Chief John Donnelly with a situational update.
Thank you, Mayor. Again, Sean Duffy here, Secretary of Transportation. We wish we were gathering for different purposes today. I just want to let you know that the Department of Transportation, the FAA, along with the White House, President Trump, local, state, and federal partners all working together on this incident in unison. I couldn't be prouder of this team that's been assembled, working tirelessly. Mayor, I want to thank you specifically for your work. A few details I'd like to give all of you, and some of you reported this, but last night, if you live in the D.C. area, you would know that this was a clear night last night. The helicopter was in a standard pattern. If you live in the D.C. area, you'll see helicopters up and down the river. This flight pattern is seen oftentimes when you live in D.C. This was a standard flight pattern last night as well. The American Airlines flight coming into land was in a standard flight pattern as it was coming into DCA. So this was not unusual with a military aircraft flying the river and aircraft landing at DCA. And again, if you live in the area, you'll see that frequently with those two aircraft working together. As many of you have reported, we have located the two aircrafts. The fuselage of the American Airlines plane was inverted. It's been located in 3 different sections. It's in about waist-deep water, so that recovery is going to go on today as that recovery takes place of the fuselage of the aircraft. NTSB is going to start to analyze that aircraft, partner with the FAA with all of the information we have to get the best results possible for the American people. I would just say that safety is our expectation. Everyone who flies in American skies expects that we fly safely, that when you depart an airport, you get to your destination. That didn't happen last night. And I know that President Trump, his administration, the FAA, the DOT, we will not rest until we have answers for the families and for the flying public. You should be assured that when you fly, you're safe. Thank you.
Thank you, Secretary. Thank you, Mayor. I'm joined today with Fire Chief Bonnet from the Metropolitan Washington Airports Authority, and I'm John Donnelly, Chief of the District of Columbia Fire and EMS Department. Last night at 8:48, the control tower sounded an alert, which alerts responders to respond to a report of an aircraft crash on or near the airport. That sets off an immediate response from the Airport Authority Fire Department, from the District of Columbia and Metropolitan Harbor Patrol fireboats and other fireboats on the river in order to support that type of operation. Very quickly, this call escalated. It became apparent, the responders realized that they had a plane crash and immediately escalated to a response that ultimately included about 300 people last night. These responders found extremely frigid conditions. They found heavy wind. They found ice on the water, and they're operated all night in those conditions. I'd like to take a moment to acknowledge the agencies that responded in addition to DC Fire and EMS and the Metropolitan Washington Airports Authority, Montgomery County Fire Department, the Prince George's County Fire Department, the Charles County Fire Department, the Baltimore County Police Department, the Anne Arundel County Fire Department, the Alexandria Fire Department, the Arlington County Fire Department, the Fairfax Fire Department, the Prince William Fire Department, the Baltimore City Police Department, the Maryland State Police, the Maryland Natural Resources Police, the Department of Defense, the Joint Base and Bowling Fire Department and the staff there, the U.S. Army, the U.S. Coast Guard, the United States Park Police, the Metropolitan Police Department, the FBI, and the NTSB. Despite all those efforts, we are now at a point where we are switching from a rescue operation to a recovery operation. At this point, we don't believe there are any survivors from this accident, and we have recovered 27 people from the plane and 1 from the helicopter. The district office of the medical examiner has lead on reuniting these bodies and these people with their loved ones, and we will continue to work to find all the bodies and collect them and reunite them with their loved ones. We should also acknowledge that the Virginia medical examiner and the Army medical examiner are involved in this operation and a very important part of getting people identified. So.
Our hearts are certainly with all of the crew in American Airlines, and we'll hear from CEO Isom.
Thank you, Mayor. Good morning. I'm Robert Isom, the CEO of American Airlines. I want to express my sincere condolences for the accident that happened at DCA last night. We're absolutely heartbroken for the family and loved ones of the passengers and crew members, and also for those that were on the military aircraft. Our focus right now is doing everything that we can to support all of those involved and also the PSA Airlines team. This is devastating. We are all hurting incredibly. We urge any family and friends looking for information about their loved ones to call our designated helpline, and that's at 1-800-679-8215, 1-800-679-8215. And here's what I can share at this early stage. American Eagle Flight 5342, operated by PSA Airlines, traveling from Wichita, Kansas to Reagan National Airport, was involved in an accident just before 9 p.m. local time on final approach into Reagan National. It collided with a military aircraft on an otherwise normal approach. And at this time, we don't know why the military aircraft came into the path of the PSA aircraft. Flight 5342, a CRJ 700, was under the command of 4 crew members. They carried 60 passengers, as you know, for a total of 64 people on board. In addition to local resources already here in D.C., American Airlines has activated our care team, and that's a group of specialists that are trained to support these types of responses. These team members are on site or arriving soon. And additionally, we have members of our GO team that are on ground here in D.C., and they're being deployed with resources to do everything that we can to take care of the needs of the families and the loved ones of the passengers and crew members. And that is our sole focus. And we're so grateful for the first responders. They've been working through the night, courageous efforts. And we're actively working with local, state, and federal authorities on emergency response efforts and closely coordinating with PSA Airlines
as they cooperate fully with the NTSB on the investigation. I know that there are many questions at this early stage. I just won't be able to answer many, but we'll provide additional information as it comes. Thank you.
I want to introduce the Metropolitan Washington Airports Authority CEO, Jack Potter. The authority manages Reagan Washington National and Dulles International.
Good morning and thank you, Mayor. First, let me begin by expressing our condolences for all the victims of this flight and for their families. There's a lot of grieving going on, and so we're very sympathetic to that. I want to echo what was said about the first responders. When there's a problem in this area, everybody drops everything and they rush to wherever the problem is. So I want to thank the chief, the entire team from Washington, D.C., but just as important, the list of folks that the chief described. Federal authorities have been here en masse, and so a lot of effort was brought to bear. Unfortunately, we weren't able to rescue anyone, but we are in the recovery mode right now. And I just want to, last night I expressed the fact that we hope to open at 11 o'clock today, and that is still the case. We're going to open the airport at 11 o'clock. And again, condolences to the families, and thanks to the many, many who are still out there working very, very hard to complete this recovery. Thank you, ma'am.
I do want to acknowledge that the Virginia Transportation Secretary is here, in addition to the Alexandria Mayor, and I will like to ask members of the Virginia congressional delegation to the podium next. U.S. Senator Mark Warner, followed by Tim Kaine and Representative Don Beyer.
Thank you, Mayor. I want to join with everyone else and express my condolences for the victims. For folks who don't live in the DMV, we are made up of a lot of jurisdictions. Reagan Airport's in Virginia. Across the river we have Maryland, obviously the district, but has been indicated by the chief, when tragedy happens, all those distinctions between the various jurisdictions and our federal partners all disappear. And I want to again thank all the first responders. On a personal note, I'll just add that literally I now know I was coming back from the district from a dinner to my home in Old Town Alexandria. And while I did not see the collision, I wondered, I'd never seen this many red lights streaming towards the airport and across the river in Maryland about this time. My phone started blowing up and I realized that this accident had taken place. There'll be a time to figure out. I know NTSB will have a briefing later in the day. But to the victims, our condolences. To the first responders, our thanks.
The sorrow, thanks, and questions. So sorrow, as all have expressed, to the crew, to the passengers, to the soldiers, to their families, to their friends, to their loved ones, to people who are still trying to get information and unsure whether their loved ones have been lost. We offer our profound condolences to them and our sorrow for this tragedy. Thanks, I'll echo, Mayor, what you began with. When you see a challenge like this and you see people from so many different agencies, local, state, federal, with different uniforms, different badges, but working in such a coordinated way, even in the midst of a tragedy, it does give you a sense of appreciation and pride in people's willingness to come to the danger and work together. And I started to see that as a local official 30 years ago in Richmond, and definitely have seen it here. And then finally, questions. There are going to be a lot of questions, obviously, a lot of questions. And that's what the NTSB's job is to be an independent investigator of incidents like this. And they are here. We were in dialogue with them earlier today. They've been here since they got the alert, and they will be doing the work and playing lead in answering the many questions that we have. And that's as it should be. It's not a time to speculate. It's a time to investigate and get answers to the questions we need. And I have confidence that will be done. Thank you.
Following up on the Senator, I think grief, thanks, and service, with millions and millions of Americans traveling every year, we are all grieving, knowing that it could have been our loved ones, it could have been us. And our hearts go out to all those who have lost folks. In a most partisan place, also, I'm really thankful that Democrats and Republicans, people from all over, have come together to try to make sure that people are served. As a local representative, I want the families to know that our office is available to serve you in any way we possibly can through this time of grief and transition and loss. And then also just note that we're deeply grateful for the people who risked their lives last night on a moment's notice and spent the whole night on the river in the ice and the wind, serving us. And then finally, as Senator Kaine, Senator Warner noted, after the NTSB investigation, we've got to make sure that at the federal level and with the support of Virginia, Maryland, D.C., we're doing everything we can to make sure this does not happen again.
So with that, it's been said already that the National Transportation Safety Board becomes the lead agency in the investigation. Our jurisdiction in D.C., where the crash occurred over the river, concludes as we, in the leadership role of the Unified Command, as we shift to a recovery effort. We expect the National Transportation Safety Board to provide briefings to the press later in the day. So at this point, we can take a few questions. Yes?
Can you say without a shadow of a doubt that people are safe to fly?
What we can talk about today is what happened here with the collision of these vehicles. We've said what we know, and that the National Transportation Safety Board continues to investigate. I don't know that any of us have been briefed on anything that would suggest any other aircraft are implicated. Yes?
You're still missing 30 plus people in the water. What are some of the challenges in recovering them right now?
Chief.
So the rescue operation, or the recovery operation, goes on. It's a lot of touch and feel in the different parts of the plane or in the helicopter, and the crash area is a little spread out, so we've got some work to do. And I think it's a pretty normal type of situation. I don't think it's extraordinary.
How spread out is this debris field?
So the wind started blowing last night, so we've had debris travel from the airport down as far as the Wilson Bridge.
Mile-wise, how far is that?
I couldn't tell you.
Okay.
Less than a month.
This is a question for CEO Carter. You're going to open the airport at 11 o'clock this morning. How are you going to do that? And what impact is that going to have on operations, on passengers, on people's anxiety? How are we going to do this?
Well, we're going to open the airport at 11 o'clock. It's safe. We've worked with all the federal agencies, FAA, and it's been determined that we can open that airport safely. The recovery effort that's on our property is on the waterfront. Our primary runway, 119, will be open. It's away from any activity. We're going to have a secure area around that, so all are comfortable that we can get back to operations. Now, each airline will announce or communicate to their passengers what their operations are going to be. Obviously, their networks were disrupted overnight, and so we might have a slow recovery, but the bottom line is we will begin to have aircraft move in and out of this airport at 11 o'clock.
Okay, so 1, 2, 3.
Has the flight recorder been recovered, the black box at all?
I don't think we can say anything about what's in NTSB's purview.
You mentioned the airport opens 3 hours from now. There's a lot of helicopter traffic from the military, U.S. Park Police and all that. Will helicopters be flying right through here as well, beyond the recovery efforts?
I don't know the answer to that. Jack, do you have anything to add? We don't have anything to add about that. Yes.
This is for Secretary Duffy. Can you reassure Americans that the U.S. still has the safest airspace in the world?
So the question is, can I guarantee the American flying public that The United States has the most safe and secure airspace in the world, and the answer to that is absolutely, yes, we do. We have early indicators of what happened here, and I will tell you with complete confidence, we have the safest airspace in the world.
When it comes to informing these families who've tragically lost their loved ones, what has that looked like so far? Have any of them been informed? The flight manifest, is there any details you can provide on that front? Chris, can you add anything?
All I can say is that we have published the 1-800 number. We have family assistance centers set up here in DCA. We do in Wichita as well. I'm not at liberty to give the number of families that have been that have used those services, but we are making that use. We have over 100 team members that are either here or on their way that are specially trained to work with family members, handle travel arrangements, hotel arrangements, incidentals, to make sure that we're taking care of people in any way that they can, as you know, as our teams are hurting and suffering, as our passengers and their families need assistance. We're doing everything we can. I don't have any more information on that right now.
Mayor, go next.
Chief Donnelly, can I ask you to describe the next phase of the investigation? How confident are you that you'll be able to recover all 67 of these bodies? And can you speak to some of the debris that's also being pulled out of the river? We understand there are some suitcases, some other things that have been pulled out from the river. And I would like to ask anyone here, perhaps the Transportation Secretary or Mr. Isom, if we know anything about these victims, age ranges, nationalities, anything of that nature.
So the next phase of this operation is going to be led by the NTSB. All of us are working together, though, to search the area and find the victims. I'm confident that we will do that, and that will take us a little bit of time, though. It may involve some more equipment. As far as the things being collected, I don't have personal knowledge. I know that we have been collecting debris that you would expect to see from a plane.
And anything about the victims?
So the question is about the victims. The NTSB is going to lead that portion of the contact with the victims. I believe American is going to be involved with that as well, and so will the FAA and the Department of Transportation.
Secretary Duffy, we're going to take some questions over here. 1, 2, 3, 4. Okay.
First, Secretary Duffy, the flight path that the helicopter was on, is that a common flight path, and is it normal for helicopters to get clearance to cut across busy approach paths?
So I don't know if you all could hear the question. It's a question about the flight path of the helicopter. I don't want to go into too much detail about the information we have from the FAA, but obviously it is not standard to have aircraft collide. I want to be clear on that. But prior to the collision, the flight paths that were being flown from the military and from American, that was not unusual for what happens in the DC airspace. And as this investigation moves forward, we will be able to provide more information to you about the details of that statement.
I wanted to follow up on that question regarding the flight path, because you said it's standard. So can you speak to the conversations with air traffic control? Were there blind spots here? I don't know if you can expand.
So the question is, were there blind spots with air traffic control? I don't want to make statements about that. I don't lead into that answer. But again, I think whether it was air traffic control, whether it was military aircraft, helicopters, or the American flight, everything was standard in the lead up to the crash. Now, obviously, something happened here. You'll get more information and more details as this investigation moves forward. We'll learn what happened. But again, those who live in the DC area, we see military helicopters fly up and down the river. It's a standard path that they fly. They're used to aircraft landing at DCA. And there's a procedure in place because this happens every day. Something went wrong here. I look forward to the time and point when we can give you that information, but I don't want to comment on that right now.
Okay, next.
Senator Kaine, Senator Warner, you all have been, very vocal about your concerns about busy runways here, air traffic. I know it's still early in the investigation. I'm just curious if any steps that you all plan to take to address that.
We have raised this issue continuously. We've got very busy airspace. I think we will ask questions, but at the appropriate time. But we are in this period right now where families are still being notified. We're trying to figure out what happened. There'll be time for those discussions.
Yeah, I'd just say the same thing. We've been pretty plain about our concerns, but it isn't a good time to speculate right now. We have faith that the NTSB will provide the answers about this.
Okay, you fourth here, and I'm going to take 3 in the middle, and then we're going to have to wrap 1, 2, 3 after this young man.
Thank you, appreciate it. Chief, I know, again, I can imagine it must be traumatic for your first responders to have to deal with this. How are they doing right now, and are you all going to be offering any services to help them as they process this?
So thank you for the question. Our first responders are resilient people, but yes, this call will be hard for them. Our peer support teams are already engaged with the responders, and we'll be following up on that to make sure that they're okay. But I think the concern is real.
Thank you, Mr. Mayor. What kind of communication was there between the helicopter and the tower, the plane and the tower, and the helicopter and the plane?
I don't want to say too much on the communication between the helicopter and the tower and the airline and the tower, but I will say this: there was communication. It was I would say standard communication. So there was not a breakdown, if that's your question, in communication between the military helicopter and the American airline flight. There was communication between the aircraft and the tower.
Was the plane aware there was a helicopter in the area?
I would say the helicopter was aware that there was a plane in the area.
You mentioned that. So the president, you said yesterday that he called into the briefing room. Has he returned to the briefing room since then? Have you spoken? Also a question about the National Security Advisor, Mike Waltz. He's saying that there was 30 bodies that have been recovered. That you just said that in the White House. Curious, I know you're in this presser right now, so that's hard for you to update, but I do have the question on POTUS in the briefing room.
I can do the body. Okay. So in terms of body recovery, as we recover bodies, we have a process, and we're not counting any bodies until they're in the possession of the medical director. So there may be some fluctuating in numbers that other people would report, but our numbers from the medical examiner.
So just in regard to the president in the briefing room, I've been with this team for the last hour plus as we've worked through the details of the information we wanted to give you. But it is my understanding that either this morning he was going to be in the Situation Room, or the Situation Room is obviously briefing the president. He has been kept in full appraisal of what is taking place.
Okay, last two, you ma'am. First.
You mentioned that the aircraft was on a standard flight pattern. Just curious, when the airport opens at 11 today, will planes be on that flight pattern again, or are they being directed to fly a different way to leave?
Well, I mean, safety is paramount, and I don't have that information quite yet from the FAA, so I don't want to provide an information I don't want to provide an answer or inaccurate information on what routes will be flown out of DCA.
Okay, last one.
Two questions really quickly. What do you know about the experience and history of the pilots of both the American Airlines plane and the Army Black Hawk helicopter? And then for Secretary Duffy, last night the president had said that this could have been prevented and questioned why air traffic control didn't tell a helicopter what to do. Is that something that investigators have determined should have happened in this situation?
Secretary. Just quickly, I don't have a lot of information to release, but these were experienced pilots. I know that the captain had 6 years with PSA, or almost 6 years with PSA, and the first officer almost 2 years. Again, standard approach, and that's about all I can say. Thank you.
In regard to the military, I don't have information in regard to the experience of the military pilots. I would just note that this was classified as a training mission. sometimes people could think that a training mission is someone who is inexperienced in the cockpit. We call these missions that are flown in the DC area as our pilots are getting hours in experience training missions. So don't read into that we had how many hours the pilots on the military aircraft had. And you had another question for me that was...
Last night, the president had said that this could be prevented, and also that air traffic control, questioning why they may not have communicated with the helicopter telling them what to do.
We are going to wait for all the information to come in from this vantage point, but to back up what the president said, what I've seen so far, do I think this was preventable? Absolutely.
Thank you.
Is there an acting FAA director?
Officials wrapping up a press conference at Reagan National Airport after a deadly collision last night between a regional American Airlines plane and a military helicopter. We don't believe there are any survivors. We're switching from a rescue operation to a recovery operation. Those headlines coming from the DC Fire Chief, John Donnelly, who briefly described the conditions that the search and rescue effort had to confront: frigid conditions, heavy wind and ice on the water. As for how this happened, very few answers.
They're looking into it. The early indications of what happened, they basically came out and said everyone was kind of on a standard path. These were experienced pilots. It was a clear night. Was this preventable? You just heard Transportation Secretary Duffy say, absolutely.
Joining us now, Bloomberg's Annmarie Hordern, who is on the ground at Reagan National Airport. Annmarie, the next phase of the investigation, what do we know about what that's going to look like?
Well, the NTSB is going to be the ones that handle the next phase of this investigation. But I think whether it was the new Transportation Secretary Sean Duffy or the mayor or the D.C. Fire and EMS chief, what we learned here is that you see a number of institutions wanting to work together to get to these answers. They are clearly moving in, as we heard from the D.C. chief there, John Donnelly. They're clearly moving into a recovery phase from a rescue phase. We do know that they say the airport will be opened at 11 a.m. It has been shut. And at this moment, they don't believe there are any survivors. And that is why is that moving into that recovery stage. When it comes to questions about what happened here, I think there's a few interesting tidbits to pick out. One, Sean Duffy did say, the Transportation Secretary did say that the helicopter and the aircraft were, quote, in a standard flight pattern. And he did say those early indicators, they have early indicators, though he didn't share all the details of what went wrong, because he wanted to also really assuage American concerns that it is still safe to fly in American airspace today. But then interesting, you heard from the American Airlines CEO as well, who made his way to Washington, D.C. overnight. And he said at this point, we don't know why the military aircraft came into the flight of the PSA aircraft. So this is going to be a serious investigation that the NTSB will be having to deal with, but also the DOD and the Pentagon at some point today. Hopefully we'll hear from Pete Hegseth, the Defense Secretary.
Annmarie, there were questions about assuring people that it was safe, especially given that DCA is going to reopen at 11 a.m. And some of those details are crucial so that people understand exactly what went wrong. Do we have a sense of when we will learn exactly where the breakdown in communication happened, given the fact that a lot of the flight patterns were safe and that Sean Duffy just said that this was absolutely preventable?
They didn't offer a timeline, so everyone's going to wake up with a ton of questions, and there's going to be this huge investigation and review underway, but they didn't offer a timeline of when we could actually get those answers. Is it a matter of days, or is this going to be weeks, or potentially, have we seen in the past, months until we actually find out what went wrong? So potentially they're going to want to assuage Americans' concerns about the safety, and overall, aviation in America is very safe. We did, though, have issues the past few years that have been quite concerning with close calls when it comes to the airline industry. And there's been a lot of calls to beef up, of course, air traffic control. We saw a huge fight last year in Congress about that, but they didn't offer any timeline just yet. But of course, they did say that they'll continue these briefings, so potentially we'll get more updates on when we will get those answers later today.
Annmarie, appreciate it. Thank you. Joining us around the table is Bloomberg's Sid Phillip, our resident aviation expert. Sid, what did you learn from that news conference?
I think at the moment everyone's still uncertain about what really went wrong because, I mean,
everyone was talking about how everything was on a standard pattern and nothing was really unusual. And still something went wrong. And I think that's what regulators and investigators will be looking into, to actually figure out what happened. Why did the military helicopter come in the path of the American Airlines plane? And what can be done in the future to prevent some sort of incidents like that? Because, I mean, obviously there's been a sort of lot of talk about close calls last year, and there was that whole fight in Congress where President Biden was fighting for 2,000 ATC hires in 2025. And so with the new administration coming in and with new management at the FAA, it will be important to see how they sort of beef up, and also what really, was it an air traffic control issue or not?
Well, I was going to ask, could it be anything else other than an air traffic control issue, given the fact that they took out the pathways, they took out the potential for a flight error, given the fact that they said these are all very experienced people and everything was common? What else could it be?
It's just sometimes just Swiss cheese where just the holes line up really badly, and essentially you've got sort of an incident there where everything suddenly goes wrong, where you've got a plane that's in its final approach into an airport. You've got a military aircraft on sort of in the flight path, and sometimes it's just sort of things happen. I mean, that's where regulators will look in to see where they can sort of prevent such incidents from happening in the future.
Sid, appreciate your time, sir. Thank you. Sid Phillip there of Bloomberg. Just moments ago, a headline that none of us wanted to read coming from the DC Fire Chief, John Donnelly, saying that we don't believe there are any survivors, that we're switching from a rescue operation to a recovery operation. For an update on that and stories elsewhere, here's Danny Berger with more. Hey, Danny.
Hey, John. Yes, just to reiterate what we heard over the past 30 minutes, more details emerging around the deadly collision of an American Airlines plane and a military helicopter near Reagan National Airport last night. Officials said in that press conference that 27 bodies have been recovered, and authorities do not believe that there are any survivors. U.S. Secretary of Transportation Sean Duffy said the crash was absolutely preventable. Elsewhere in these markets, Tesla fourth quarter earnings and revenue fell short of Wall Street estimates. As you can see there, shares up more than 4% in the pre-market. CEO Elon Musk predicted an epic period of growth for the company and said it will begin robo-taxi operations this year. Prices for Super Bowl ads have risen to a record of over $8 million. That's up from last year's record of $7 million. The game is set to air on Fox and its free streaming service, Tubi. Fox reportedly received steady interest from a variety of companies. Analysts say this year's ad will feature more humor, celebrities, and nostalgia, and fewer movie trailers. That's your brief. John.
Danny, thank you. More from Danny in about 30 minutes' time. Up next on the programme, an ECB rate decision. From New York, this is Bloomberg. Equities just about positive here by a third of 1% on the S&P 500. Attention turning towards monetary policy briefly on the ECB. Over at the European Central Bank, as expected, an interest rate reduction of 25 basis points on the deposit rate. We're down from 3 to 2.75. This was widely anticipated and expected, widely indicated from the Governing Council and the members themselves over the last few weeks. A rate cut from the ECB of 25 basis points, Lisa, down from 3 to 2.75.
Yeah, the ECB is determined to ensure inflation stabilizes at 2%. They are not pre-committing to a particular rate path. They're going to take a meeting-by-meeting decision. This basically is in line with expectations. Curious to see how they frame the risks ahead, whether it's a downside risk to growth, whether it's the potential for sticky inflation, whether they talk about tariffs at a time where that seemed to be preeminent among the Bank of Canada officials.
The first decision from the European Central Bank in 2025 is a rate cut of 25 basis points. With the latest, we can head over to Frankfurt, Germany and catch up with Bloomberg's Lizzie Burden. Lizzie, that's the decision. I'm sure you're reading through the details as well going into this news conference in the next 30 minutes or so. What stands out for you?
Yeah, as you say, John, unanimously expected by economists, fully priced in by markets, because the focus has been turning from too high inflation to too low growth. This morning we had the latest reads on GDP in the Eurozone, and we saw contractions in France and Germany. We saw total stagnation across the euro area. So politics really weighing on confidence here. And this is before we even really know how Donald Trump's tariffs on Europe are going to play out. So economists were seeing another cut in March already. What we're really interested in today are hints about April. So interesting to see that, they're all saying that disinflation is well on track. They're going to follow a data-dependent approach, very much expected. In terms of market reaction, barely any movement in the euro. We're really on the watch for euro-dollar parity at the moment, of course, given Powell has said he's not in a rush to ease policy. If you start to see more and more of a divergence between the ECB and the Fed, more euro weakness, that could feed back into the inflation picture, especially if you combine it with higher oil prices, and that will create headaches for Christine Lagarde. But if that rate it gets raised in the press conference, I am sure she will say we are data dependent, not Fed dependent.
I'm glad you went there. Data dependency seems to be the phrase du jour, and that's basically what they go back to yet again. I'm curious which data is most important for an ECB that is a single mandate central bank, unlike the Federal Reserve.
Well, as I say, they seem to have brushed aside that 2.4% inflation print for December, the uptick. They've all talked about the concerns about services inflation, and yet, if this is anything to go by, a cut today and a cut expected in March, the focus, Lisa, seems to be on growth. And you say data dependence. Well, it's hard to deny that all around the world, central bankers have an eye on the White House and Donald Trump's trade policy.
Lizzie Burden on the latest in Frankfurt, Germany. Lizzie, thank you. Following a 25 basis point reduction over at the ECB on the deposit rate. There's two paragraphs that jump out here for me, and it's the second and third paragraph of the statement from the ECB. The disinflation process is well on track. Inflation has continued to develop broadly in line with the staff projections and is set to return to the Governing Council's 2% medium-term target in the course of this year. That sounds great. So what should that mean for policy? This line on policy, finance conditions continue to be tight, also because monetary policy remains restrictive and past interest rate hikes are still transmitting to the stock of credit, with some maturing loans being rolled over at higher interest rates. Aren't they making an argument to lower interest rates even more in the second paragraph, and in the third, acknowledging that monetary policy is too tight, which is kind of odd for me with the ECB at the moment, that they're not being more aggressive with a much more dovish stance given the disinflationary process that they appear to have confidence in?
This is an endorsement of long and variable lags. This is saying that the long and variable lags are affecting and constraining growth. This speaks of some of the dissent that maybe there is on the ECB Governing Council. Some people looking at that 2% target as gospel, saying we're not there yet. Others saying there is real downside potential for growth, sort of creeping into that dual mandate type of position.
Gargi Chowdhury of BlackRock joins us in the studio. Gargi, good morning. It's good to see you.
Good morning. It's good to be here.
Won't just talk about the ECB. Very sad day and a strange day to be talking about markets, but here we are. The central bank decision from the ECB is about 5 minutes old. You heard from Lizzie Burden, they're not Fed dependent. Are they tariff dependent? How many of us are?
I think the entire market is paying close attention to what we're going to hear in terms of fiscal policy. We saw the Fed do a really nice dance around that yesterday. I think what was important to me was the Bank of Canada statement. I thought they sort of talked about how tariffs might affect them pretty importantly. And I think many other central banks will probably, at some point, when we have more clarity, have to pull that into their forecast. I don't think that we're there yet with the Fed.
It is curious to see that other central banks can talk more openly about tariffs than U.S. central bankers. Is this an excuse that central banks like the ECB can use at a time when they are a single mandate central bank but are facing a real downside growth to shock to growth?
I think for both the Fed as well as, we're going to hear more from the ECB in a little bit of time, I think this just goes to show they're at a really tricky point. You can't make policy decisions based on fiscal policy measures that are yet to come through. You don't know the details. You don't know how much the pass-through is going to be. You don't know what the demand effects are going to be. You don't know what the retaliation is going to be. I think it puts the Fed certainly in a tricky position. I did hear some comforting words yesterday from Chair Powell, which we can talk about. But I think we're seeing that from ECB as well, that they, despite somewhat lingering inflation, have to, and their single mandate, they have to focus on the really poor GDP print that we saw this morning.
The comforting words. You heard something yesterday that wasn't just a lot of words. What were those comforting words?
So a couple of things. The comforting words, I would say, were, number one, that the hawkishness that appeared in the FOMC statement was just sort of a cleanup, operational. One can argue whether that needed to be the case, but at least that wasn't a hawkish direction. Number two, I think he made a point around going forward for further rate cuts. Inflation doesn't need to be at 2%. I thought that was an interesting distinction. They've made that before, but that was before rates were at 4.375%. Hearing that again was a reassurance. And then another thing that they talked about was just around they see that path to 2%. They are seeing that. They talked about how the last two prints on PCE have been pretty friendly for the markets, but that it's not quite there yet. I thought those were all good signs for the Fed, at least in the second half of the year, to maybe continue their rate cutting cycle.
We had a challenge potentially in some people's minds to US exceptionalism on Monday. How strong do you think that challenge was?
I think that it was one headline. This is the first, we think about this AI trade. This was the first sort of wrinkle that came through on the AI trade. Obviously, it's very early. As of right now, even when we heard from some of the companies that reported earnings, this isn't something that immediately stops any kind of capex related to AI, not as of yet. So I'm not questioning U.S. growth based on this. Now, obviously, we get GDP in a few minutes. There might be some revisions because of other reasons, trade deficits, etc. But the AI story is, I think, much more around broader adoptability now, and very good for adopters of AI, for software companies, perhaps. I don't view this yet, and we don't know enough about broad-based end of AI, which is kind of what the market was pricing in on Monday.
You saw some of the moves on Monday. It went beyond just NVIDIA. We saw it with pipeline operators, saw it even in nat gas, saw it in gas producers as well. Would you go as far as saying that maybe the energy side of this trade might be done for now?
I don't think I'd go as far as to say that quite yet. I think we don't have enough of the details yet. What I think I would take away from everything we learned about DeepSeek was it's incredible to have this kind of 97% efficiency. It's so much better to have models being trained, but the inferencing power will probably still require a lot. I think that this broadens out the AI trade to perhaps other parts of the market. I think it's a healthy sign for what we saw on Monday, where 70% of the S&P was still up. I think that's a good thing. I think investors will probably continue to look for ways to hedge their tech exposure. And we've seen that. The good news is there's earnings coming through in other parts of the market. So this is a good time to think about these other diversifying hedges.
So just real quick here, U.S. exceptionalism still intact. You like certain aspects of fixed income. What else have we learned over the past couple of days, I guess? We're going in days right now.
Yeah, we're going in days right now. So I think what we've learned is the Fed's not in a rush to do anything with rates, which means an incredible opportunity to clip coupons. So that's number one. I think we learned that we need hedges and diversifiers to our portfolio here. It's not just about those 5 big stocks, right? We learned that. So thinking about other hedges and other diversifiers, whether that be in large cap value, looking at financials, whether that be in buffered strategies, so really protecting your downside a little bit, and whether that be in things like gold, which we've talked about since the beginning of the year and has been doing pretty well.
Gagi, appreciate your time. Thanks for making some time for us this morning. Thank you. Gagi Chowdhury there of BlackRock on the latest in financial markets. Moments ago, about 10 minutes ago, an ECB rate cut of 25 basis points. And about 20 minutes from now, you'll hear from the ECB President Christine Lagarde, a news conference in Frankfurt, Germany. Before we get there, in just a moment, we'll have some economic data in America. Another read on GDP, the fourth quarter this time. And then we'll get a look at initial jobless claims. Claims the one to watch, I think, at the moment for this bond market. And what happens next with the Federal Reserve? Sonal Desire, Franklin Templeton, here to react. From New York, this is Bloomberg. some economic data in just a moment. A read on fourth quarter GDP in the United States. Look out for jobless claims as well and continuing claims. Mike McKee will break that economic data in just a moment. Equity futures on the S&P negative or rather positive by 0.3 on the S&P. On the Nasdaq 100 up by 0.5%. On the Russell up by 0.75%. In the bond market, 2-year, 10-year and 30-year. Yields lower here by 4 basis points on 10s to 4.48. With that economic data, let's cross over to Mike McKee. Morning, Mike.
Good morning, John. Well, the fourth quarter GDP numbers are coming in, and as anticipated by economists after yesterday's trade report, it is lower than anticipated, 2.3% for the fourth quarter. A lot of this, of course, is going to be due to the trade report we got yesterday. Big trade deficit. Personal consumption up 4.2%. However, Americans were spending money during the month, and we probably would have had a 3% or better GDP number if not for the trade figure. The GDP price index, 2.2% on the quarter, comes in higher than last month, higher than the third quarter, rather, but a little bit lower than anticipated. The core at 2.5% comes in as anticipated. Now, what we see is that this is for the 3 months average. The Fed yesterday backed out those numbers and said tomorrow we should see 2.6% on the headline for the December figures and 2.8% for the core. Jobless claims, of course, everybody keeping an eye on, and you'll be happy to know, John, 207,000, a big drop from the 223 reported last week, and on a continuing basis, it is 1,858,000, down from 1,900,000. So clearly, it may be that the California fires had a short-term effect, and that has worn off. Still very low jobless claims numbers, strong labor market, and growth, with the exception of trade, and we can look up the exact numbers, still strong. So you can understand why Jay Powell is saying maybe the Fed can take time and wait.
Yeah, Mike, I'm with you. Great to see jobless claims dropping back to 207 against an estimate of 225, as Mike indicated. As expected, GDP a little bit softer than expected. Personal consumption pretty strong, so that's good to see as well. In the bond market, just off the back of these numbers, yields were lower by 3, 4, 5 basis points across the curve, 2s out to 30s. At the moment we look like this, we're down just 2 or 3 now on a 10-year, back to 4.50 on 2s at the moment, Lisa, down a single basis point to 4.2032, and equity futures still positive by 1/3%.
Not a huge reaction. Cameron Dawson saying for the Fed, the recalibration phase is over. You're seeing in markets not really responding because it doesn't seem like anything in this report warrants a Federal Reserve response. Otherwise, it confirms what we have known before. The economy is strong. The jobs market isn't necessarily weakening in some kind of massive way. And so it is a non-story for markets, at least at the moment.
One of the best in fixed income joins us now for more. Sonal Desai of Franklin Templeton. Sonal, good to see you.
Good to see you too. Good to be here.
The chairman said this, that policy was meaningfully restrictive, and you believe actually we're now in the neutral range. What explains the difference between the two of you at the moment?
Oh, no, the policy is not has not been restrictive for a while now. And, you know, I did note when he said that it's very difficult to figure out what neutral is. But, you know, facts matter, and you look at what the U.S. economy has done over the period of time that we've apparently been in extremely restrictive territory, and clearly we weren't that restrictive because the economy shows us. And I'd say that I think a part of the reason the Fed cannot say that, well, you know, we're far from, that we are far from being in the neutral rate range is because then the next step would be, well, why aren't you raising rates? And I don't think they need to raise rates, but they're going to need to keep them high for quite a long period of time.
On the margins, Sonal, you are someone who raised this prospect of longer end yields rising quite considerably in the face of a resurgence of inflation. Does this dampen that risk if there is a Fed that might not be saying exactly what you see to be the reality, but isn't moving, isn't raising rates, but isn't lowering rates either?
Well, no, because I think a large part of the reason that I think long end rates are going to sell off is actually to do with the fact that I think there are going to be a whole host of policies. And I actually don't think tariffs are one of them, but I do think fiscal policy risks over the next 60, 90 days, we'll see what happens. But I think those are factors which could feed into inflation, potentially how immigration gets executed in terms of deportations, et cetera, that could have negative consequences as well. But I'm more concerned on the inflation front than on the growth front from these.
This is important. We've been focusing on tariffs as a potential economic headwind in terms of both growth but also increasing inflation. You're saying that's the wrong place to look. Which policies in particular are most potentially inflationary that you're watching out for?
So I am watching very much at what happens with the budget. It's really about the fiscal. It really is. We are running $2 trillion budget deficits in an economy that's growing definitely above potential at this point. So that's one element that I'm looking and following very closely. It looks like this Republican caucus is fairly indisciplined, so there's some hope that they can't actually expand the budget deficit as much as actually making good on all the promises that have been put out that would result in a massive expansion, and I do think that would have a negative consequence. Immigration, look, if you actually could throw out 4 million people overnight, that would be disruptive and it would have inflationary consequences, because if you're a restaurant owner and half your workforce doesn't show up, you suddenly need to hire more people and you're going to bid up wages. And that's inflationary.
Based on what you've seen with earnings, based on the early indications from the administration, have you changed your view that the bigger risk is to the upside with inflation to then, say, a deterioration in growth?
No, because actually I think that something which isn't considered very much is the fact that deregulation actually really is going to result in some positive, it's going to have a positive impact, because in the end, small business owners' confidence has skyrocketed. Yes, I know that they're typically more Republican, it's a bigger Republican base, but ultimately that confidence determines whether they want to hire more, whether they want to spend more on capex. All these things are kind of positive on growth. And finally, I really don't think tariffs necessarily have a negative growth impact on this country. Of course, the ECB is going to respond. It's a large exporting group. We, as today's GDP showed, are large importers. So tariffs aren't going to hurt our growth necessarily.
Certainly going to hurt Europe, China and others if they do go forward with this. Can we get the bond market cool? I sense maybe you think we see 5 before we see 4 on a 10-year yield.
Oh, yeah. If we're talking about 5 or 4, I would definitely say 5 before 4. Because I don't see the rational... right now, I need to see that trigger for significant economic weakness, which I'm not seeing yet. I'm not saying it can't happen. I don't think what we saw on Monday with DeepSeek is that, the canary in the coal mine. I really don't think so. But I do think that we don't know. And on this, I do agree with Fed Chair Powell. The uncertainty we're seeing today is not commensurate with the uncertainty we saw around COVID, for example, before we had vaccines. We didn't know when things would reopen. We're not looking at that. If it was something like that, you could call it.
What do you make of his stance regarding the uncertainty to policy?
I think Powell showed his origins as a lawyer. And I think that was a good thing. Overall, I'd say that what he said was, there wasn't very much there, but he's being honest. There isn't very much he can say at this point. True. I thought that he actually moderated some of the questions with respect to tariffs in a very, very reasonable way. Tariffs are relative prices, guys. It's not going to suddenly take us back to 9% inflation.
Sonal Desai, appreciate your time. Thank you. Sonal Desai there, Franklin Templeton. The latest on the Federal Reserve and on financial markets as well. Let's get the latest on our top story and head back to Reagan National Airport in the nation's capital, Washington, D.C., where Bloomberg's Annmarie is standing by. Annmarie, what's the latest?
Good morning, John. Well, the latest is that this rescue mission that has been taking place for hours overnight since that mid-air collision from that passenger jet and that Black Hawk helicopter around 9 p.m. last night is now moving to a recovery phase. They do not think there are any survivors. We were briefed here, the press was briefed in the last hour about what exactly the next steps that are taking place. There'll be an independent investigation from the NTSB, the National Transportation Safety Board, and then from there, there's just so many questions that we are waiting to hear. Potentially, when they have this opening briefing from the MTSB later today, we will get some of those answers. But we did learn from the Transportation Secretary, Sean Duffy, that he did say that both these aircrafts were in standard flight path. But then the American Airlines CEO, who was also at this press briefing, said it's unclear why the helicopter came into the flight path of that passenger airline. A ton of questions still remain at DCA in the nation's capital, a very high intense aircraft airspace, a ton of capacity here. We should note, though, that anyone that is traveling today, this airport will reopen at 11 a.m.
Annmarie, that question was asked in the news conference. How difficult will it be to reopen this airport at 11 a.m.? What was the answer?
Well, it's going to be a little bit difficult, obviously, because things are backed up. But, I mean, to be honest, I'm supposed to fly out of here at 11:10, 11:30 a.m., and I just got an alert that my flight is still on track to go. So they are trying to move people along and make sure people meet their flights. But obviously, it's a pretty tense situation here at the airport. There's a tremendous amount of police. There's a tremendous amount of official figures. I know Governor Glenn Youngkin of Virginia is at the airport right now. So I would say it is going to be, you have to deal with some potential delays, but they do plan to still reopen this at 11 a.m. Meanwhile, the recovery effort is still happening behind me in the Potomac River.
Meanwhile, there's a question around who is leading the FAA. Do we have a sense of who the potential nominee could be to take the helm of that organization?
Yeah, we're still waiting to hear about who is going to lead the FAA. You know, Whitaker stepped down in December. It comes at a very precarious and difficult time because we had a transition of power here just last week, and the Trump administration is still getting their feet wet. They're still making sure they have all their cabinet secretaries in place. Sean Duffy was confirmed earlier this week, but he was only sworn in yesterday. So today really feels like his first full day on the job. And he said when he took to that podium in the last hour that this is not the circumstances he wanted to be speaking with everyone. So we do know that they are still working on making sure that they have the appropriate staff in place. Of course, there's a number of civil servants, career servants who are part of these organizations that can help make sure things are going through. But we also should talk about, we're right here south of the Pentagon, the Defense Secretary. There's going to, of course, be an investigation. We heard from Pete Hegseth from the DOD and what happened with this helicopter that we've learned was on a training route last night. We do see a lot of helicopters in Washington, D.C. There's a ton of commercial aircraft. There's also military aircraft here. Just the nature of this airport and the nature of this city.
Annmarie, appreciate the update. Annmarie from the nation's capital at Reagan National this morning. Let's give you an update on stories elsewhere with your Bloomberg Brief. It's Danny Berger. Hey, Danny.
Hey, John. Caterpillar shares are down nearly 5% in the pre-market trade. Fourth quarter earnings did beat analyst estimates, but Caterpillar warned that sales and revenue will be slightly lower in 2025. Those results, though, could quickly change for all global manufacturers, given expected tariffs from President Trump. NVIDIA shares are also lower this morning, down by just under 1%. The Trump administration is reportedly exploring more curbs on NVIDIA chip sales to China. Sources tell us that officials are focused on expanding restrictions for chips used for AI development. NVIDIA argued restrictions push China to become independent of U.S. tech, which will only in turn hurt U.S. companies. Elsewhere in tech, SoftBank is said to be in talks to invest as much as $25 billion in OpenAI. People familiar say that this would be on top of the $15 billion that CEO Masayoshi Son has already committed to the American Stargate AI infrastructure venture. The move could potentially make SoftBank OpenAI's biggest backer. OpenAI, for its part, declined to comment. That's your Bloomberg Brief. John.
Hey, Danny, thank you. Appreciate it. Up next on the programme, we'll set you up for the day ahead and count you down to a news conference with the ECB President, Christine Lagarde. All of that in just a moment. From New York, this is Bloomberg. The opening bell about 43 minutes away. Equities positive by 0.2%. The data okay. In fact, jobless claims encouraging. They power back. The right kind of downside surprise. Yields are lower by about a basis point on a 10-year at the moment, 4 51. In just a moment, you'll get a news conference with Christine Lagarde. Before we get there, I want to bring you the week ahead, the next couple of days. Later on this afternoon, earnings from Apple and Intel after the closing bell. On Friday, PC on Saturday. A big one, President Donald Trump's self-imposed tariff deadline, so look out for that one. As for the ECB, the European Central Bank earlier this hour cutting interest rates by 25 basis points. Some encouraging words on disinflation. The disinflation process is well on track. Deutsche Bank and Mark Wall, the chief European economist, with this to say: this is the 5th cut in total and the 4th in quick succession. There is really no reason to think the ECB won't continue to cut interest rates, at least to a neutral level, and we think quite probably below neutral by year end. And I think that gives you a flavour, Lisa, of how different the conversation is at the ECB compared to what we heard from the Federal Reserve just yesterday afternoon.
No one is challenging why they're cutting rates, even if the inflation rate isn't down to a total 2%. As the ECB said in their statement, the economy is still facing headwinds. They also talk or infer long and variable lags, saying that the interest rate hikes from the years past still are trickling through to the economy. They have negative growth in certain sectors. The U.S. is growing rapidly. The story is much clearer, even though they're a single mandate bank and there hasn't been a drop to 2% of inflation.
Finance conditions continue to be tight at a time when maybe you can make the argument that they really shouldn't be at the European Central Bank. This really is the complete opposite of what we heard from the Federal Reserve just yesterday.
You can't say that conditions are tight in the U.S. by any measure, given the fact that spreads are so tight. At the same time, when you look at bank lending in the European region, you see constraints there. You see a reluctance to lend, a reluctance to ask for loans. It is a completely different picture. Are they being given a pass as well to potentially cut rates much more quickly in the face of the risk of tariffs?
The first news conference of 2025 with the ECB President Christine Lagarde. Let's take a listen.